Good afternoon, everybody. Coffee and stock time. Before we get into everything, whoa, a little bit of feedback there. I don't know how to operate multiple things. Ridiculous. Please pause the video. Please read the disclaimer. I am not a financial advisor. I am not your financial advisor. I do not know what your situation is. Please use anything I say as just research and educational purposes and entertainment value. Appreciate everybody pausing and reading this. Thank you very much. Now let's get on with the show. Before we get into everything that I have broken out, I'm going to make a speculation that I really have no premise to make. I'm going to do it anyway. Nano Banana from Gemini is amazing. The thumbnails that you can make and the stuff that you can make with that is ridiculous. That thumbnail was made in all of 10 or 15 seconds. I just put a headshot in, told it what I wanted, and that was the second image that came out. Gave me two, that was the second one. And I gotta say, I don't know how Adobe is going to respond. And Adobe is a company that I have thought looked very cheap from the numbers, but the more that I see these tools and the more that I can see what they do, why would I ever want to edit anything in Adobe or use it? It's just, I got to tell you, this is, and I'm going to quote Tanner because this is something Tanner says. This is not original by me. This is the worst that these platforms are ever going to be. This is the worst that ChatGPT will be. This is the worst that Gemini will be. This is the worst that Anthropic will be. They will just get better. And when you think about the use cases and you think about how much time it saves, now maybe there are little things that I can nitpick and I want differently, but for a 10 or 15 second output, that thumbnail is pretty damn good. And I know it's unfair because I'm not a graphic designer. I don't do anything in that realm. And I am sure that in the Adobe suite, there are a lot of things that you can do that you can't do with AI right now. I have to think that within the next 6 months to a year, you're going to be able to do so much more with Gemini and ChatGPT that you're going to be able to at least edit videos and do other things. So I got to tell you, Adobe is something that I'm really interested in reading about more than just going through the numbers. I need to learn the actual business because I think that we're going to see a lot of disruption. And unfortunately, I think a lot of freelance work is going to get disrupted also. In the past, I would have paid somebody to do my thumbnails because I just simply don't have the time to do it. I would have paid people to do things on Fiverr or something. I just type in what I want, I get the output. It's really incredible. So I got to tell you, well, all right, so I am looking at the comments and Adobe is attractively priced. I get it, but is it so attractively priced that a Gemini subscription isn't worth it? I mean, we'll see. We will see. You guys are saying the camera's blurry? Really? Don't start this again. What the hell is going on? All right, give me a minute. This is ridiculous. Hold on. I'm so sick of this. Guys, if you don't think that I have 1 gig, you're crazy. Of course I have 1 gig. I legitimately do not know what's going on. So I did have my smart firewall on. I just turned it off. Hopefully that makes the bandwidth better. Try putting your hand close and then let it refocus. Did that improve? All right. We're going to figure this out one of these days. I apologize, everybody. We will figure this out one of these days. It got worse? What? It looks perfect on StreamYard. What the hell? I'm getting really annoyed at this. I really am. I am using StreamYard, and all right, you guys are saying it looks good now? Okay. I mean, if I have to, I'll change internet providers. I got the choice of two, Spectrum and Verizon. Maybe I'll just have Verizon come in and just get rid of this internet. That may be a this week project at this point because I am sick of this and I do not want to deal with this anymore. So I don't like the fact that you guys are complaining about this. So this will get fixed. So, all right. Anyway, Adobe. Who is this? Oh, okay. We got a special treat for everybody. We got somebody doing a drive-by. And by the way, we're going to put everybody on notice right now. I did send the link to Matt. So if Matt pops in and, oh, here he goes. I didn't even see that he was in the chat. I was about to say, he can't freaking blow me up and say that I don't love him or I didn't send him the link because before I went live, Real Matt Money has the link on his WhatsApp, time-stamped at 3:58. So anytime that Matt wants to come on, he is more than welcome. Anytime I do a stream, I will check in with Matt first and he will have a link and he is welcome at any time. So let's get on with it. Adobe's going to be really freaking interesting. We'll see what happens. But the thumbnails are fire on Gemini. And anybody who has a Gemini subscription, go try Nano Banana. And I got to tell you, I was really impressed. The thumbnail from last night and the thumbnail from today were made with it. So I'm probably going to start using that instead of trying to make them on my own with Canva because I don't have the time to do that. So let's get into it. It was a good week. And what I want to go through today is get my other set of notes out. So let's see. What happened this week? I want to go into outlook for next week, different economic data points. I want to get into major news stories of this week. I want to get into what companies are reporting next week because I'm not sure if everybody realized. I did not realize Oracle and Broadcom are reporting next week. I want to talk about that. GameStop is reporting next week. I don't think many of us care, but from an alternative asset perspective, it's interesting to me. We also have the Fed meeting and we got some economic data points. So a lot to go through in this. Some of this I went through last night. I'm going to make it a little bit different today. So last week, markets rallied a little bit. We did not have a down week. Markets went up a little bit. And look, I think that we're setting up pretty well for this week. So it's a wait for the Fed moment. I think we can all agree on that. Markets drifted a little higher, but it's all coming down to what happens on the 9th and 10th, what comes out of the FOMC. We had mega caps, which, I'm going to start calling them the Fab Five because I don't think Tesla should be in there, which would bring down the Spectacular Six. And quite honestly, I don't even like putting Apple in there anymore, but you know what? Apple does deserve it. So we'll start calling Spectacular Six. They've been consolidating, and that narrative of the AI bear trap is still out there for some reason. I don't know why. It's still out there. So we'll see what happens. I think that one of the biggest things is going to be if we get that Fed cut, I think those stocks are going to rally, which is going to move the market higher. So the 10-year moved to about 4.1% on the coupon. The 2-year was around 3.5%, maybe just a tick higher. So it's nowhere near where they were. And I think that the risk-free environment is starting to look not nearly as enticing as it once did. So manufacturing is still in a little bit of a slump. We had the ISM manufacturing PMI for November around 50, 9th straight month in contraction. So not great. There's uncertain tariff and trade policy going around. We still don't know all the ramifications from the tariffs, soft global demand, and a broad shift in spending from goods to services. So we'll see what happens. We have the ISM service index at 52.6. So this is actually a 9-month high, and it's in expansion territory. We have the November jobs report, which would have normally dropped on Friday, December 5th. It's being delayed until the 16th. So that's actually not this week, but the following week. So not this Tuesday, but next Tuesday, we will get the official November jobs report. And to paraphrase my rant from last night, our tax dollars should have already put the government in a position where they have real-time data. We all pay taxes. There's no way anybody is going to freaking tell me that they do not know how many people pay taxes versus how many people didn't pay taxes. They get the data every 2 weeks or every pay cycle. So the idea that we're waiting for freaking official November jobs reports is insane. It's absolutely insane. Every company pays payroll taxes. So I just think it should be real time. Nobody's going to convince me otherwise. We have the private data. So the ADP private payrolls reported that private employers cut about 32,000 jobs in November versus the expectations of a small gain. It's a clear sign of cooling in the hiring. Now, not great because we're going into the holiday season. So weekly jobless claims, we had the initial jobless claims plunged to 191,000, lowest level in more than 3 years, and below the consensus expectations of 225,000, which was down from 216,000 the prior week. Continuing claims was elevated at 1.94 million, which suggests people who are losing jobs are taking longer to find new work, even though layoffs are not as high as what could have been expected. So I think that just goes back to we have a restrictive interest environment, which is not inclusive to entrepreneurship or tapping the debt markets to expand or refinancing debt. So I truly believe the Fed needs to take these rates lower. So we also have expectations for the Fed. We're around 85 to 90% that we're going to get a 25 basis point cut. Whenever I say bips, I really mean to say basis points because I think bips just sounds stupid. I don't know why people just don't say percentage or basis points. So I'll try just to say percentages going forward. So this would bring the rates down to 3.5 to 3.75%, which would be a little bit less restrictive, but we need to get it lower. We need them under 3%, in my opinion. So the hawks are worried that inflation has stayed above 2% for years, where the people or the Fed presidents that are dovish are worried that if they don't cut, the weakening labor market would continue to crack, which is the camp I'm in. And I really do believe that if we do not get a cut, it's going to be really bad because they're going to have to play catch up. And over the winter, if we get a stall again at the January meeting, that means that we don't get a rate cut until February. March. Am I correct on that? CME Group. I don't believe that there's a February Fed meeting. There isn't. January and then March. So in my opinion, the worst thing that we could do is get a halt where we're data dependent again, and then get a halt in January, because then we get to March, and that just would not be good for anybody. So I do think that we're going to be in a situation where they cut. I think there's a lot of pressure to cut. When you look at Williams and Waller coming out saying that they're in favor of a cut, I think they're going to, we know Bowman's in favor of a cut. So I really do think that we're going to see a cut this week, which will be huge for the equity market. And look, if we don't get one, the equity market's already pricing it in. That's not going to be good. And the chance of a Santa Claus rally will be seriously decreased. And that's not what I want to see. And quite honestly, this came out last night. I'm going to reiterate the fact that while a pause on cuts would likely create a scenario where equities decrease in value and people that are sitting on cash will be able to allocate cash and get more shares for their capital, I don't want to see that. I don't want to see it. Here's why. I care more about the American economy. I care more about jobs, and I care more about Americans not getting laid off and corporations not having to be in a position to lay people off. And for the corporations that are laying people off, I want an environment where there's more jobs from smaller businesses and entrepreneurs, and you're not going to get that in a higher rate environment. So I would rather forego a dip in the equity markets just to better myself and other people by being able to buy assets at a cheaper price for the good of the American economy. I think it's wrong to be selfish, and we can all make money. So let's hope the Fed does the right thing, because if they don't, I got to tell you, next week's not going to be pretty, in my opinion. So we had a lot of news this week. We had the Netflix Warner Brothers Discovery deal, which I'm not going to go into right now. When one or two of the other people who said, oh, let's not put Matt in that boat. Matt's, who knows if he's going to come. Sent him the link. We have a special guest that said that they're going to stop by in a little bit. So I'm going to ask them what they think of that deal. Everybody who tuned in last night heard what I felt, so I'm not going to waste everybody's time with my thoughts on that. The SoFi dilution was big. I'll hit on that for 30 seconds real quick. SoFi is diluting by 1.5 million. If the additional shares that they're granting the underwriters come through, it'll be up to a 5% dilution. The stock's sold off by about 7% or so. And I am happy that they're diluting shareholders where the stock price is. It is way better than dilution if the shares were at $20 a share, because they have to issue less shares to generate this capital. Anthony Noto, their CEO, and Chris Lapointe, their CFO. Did I say CFO? I'm sorry. Anthony Noto, their CEO, and Chris Lapointe, their CFO, have never steered shareholders wrong. Every time they've done an equity raise, it's been used for purposes that have expanded revenue, adjusted EBITDA, and net income. Q2, we got a triple beat in the morning, issuing of shares in the afternoon with dilution. Q3 rolls around, they slaughter earnings. I'm not worried. I fully support whatever they want to do with it. Not that they need my opinion or anybody else's opinion. We can simply sell our shares if we don't agree with them. They're great stewards of capital, in my opinion, and I am happy to remain a shareholder right now. And I'm excited for what they're going to do. We'll see. Salesforce reported this week, and I do think that Salesforce is my dark horse for 2026. I need to make a note. Something just popped in my head as I went to open up a browser, and Palmer Luckey's face came up in an article, and I want to discuss the IPO market for 26 in a little bit. So I'm going to make a note of that. But I want to bring up just a valuation table real quick, because Salesforce is so undervalued at this level that I got to tell you, it's borderline crazy the way that they're being disrespected. Let's bring this up. Let's get Alphabet unhighlighted. Let's highlight Salesforce. So Salesforce on a forward basis now is trading at 22.29 times this year's earnings. And I should probably check real quick just to see if the information was updated for them. So I'm going to bring up the analyst projections on the forward earnings for Salesforce, just to make sure nothing has changed. And it has by about 8 cents on this year. Next year, it's increased by 3 cents. And this one's roughly the same. This one only increased by 2 cents. But be that as it may, why is NVIDIA? Oh, okay. Because I was playing around with NVIDIA's share price yesterday. So Salesforce is trading at 17.5 times 2027 earnings, and they have 26.5% EPS growth over the next 2 years. They're trading at a forward multiple that is under what I would consider value territory. And the market continues to disrespect their ability to be an AI company. They just don't believe it for some reason, which doesn't make sense. They're trading at a lower multiple than Coca-Cola with, call it, 70% more forward growth. I mean, I love Coca-Cola. I love drinking it. I'm a shareholder. But if you had to ask me where I think which one of these two companies is going to do better on an ROI basis over the next 3 years, I got to think it's Salesforce than Coca-Cola. That's just my opinion. So I think Salesforce is a dark horse. They're a cash cow. I'll bring up the actual numbers from them. I actually think I updated it in my margins. Give me a sec. Did I not update it here? Maybe I did on a different spreadsheet. I feel like I must have done it on a different spreadsheet. Hold on. I know I did it, so I will bring it up. Give me a sec. Which one did I do it on? I don't know. I don't know which one I did on. I could have swore I did. But regardless, they're expecting to do $41.5 billion in revenue for 2026. They're expecting to do about $13 billion in free cash flow. The stats on Agentforce is really insane, considering that Agentforce and Data 360 are nearing $1.4 billion in annualized recurring revenue, which is their ARR, which is up 114% year over year. Agentforce alone is doing $500 million in ARR, which is a quadruple year over year. And Data 360 platform has ingested 32 trillion records. They're training on so much data, and so many companies are utilizing this product that I got to tell you, I really do think that this company is doing big things and everybody is missing out. They're going to miss the boat. This will be looked at most likely as the 2026 AI catch-up trade. I really do believe so, because their story is getting bigger and bigger in AI, and they're trading at a multiple that is making less and less sense. They're monetizing their assets. They have additional revenue being generated from all these additional products. And the reality is, a lot of people like to complain that, oh, we don't like Salesforce, it's a shitty product, blah, blah, blah. Well, they're not the ones making the decisions with the IT budgets. That's the reality. They're not the ones making the decisions with the IT budgets. And the ones that are decision makers that are writing the checks are continuing to go with the Salesforce product. They're deeply ingrained in corporate America. I just don't see that changing. They are, let's bring up their actual numbers. Maybe I should build it out live. You know what? I'm going to build it out live. Let's do, for this exercise, we'll do what? Salesforce and Adobe. Give me chat. Give me the competitors. Who are the biggest competitors to Salesforce? In all seriousness, I'm going to make a new tab, and we're going to do this live together very quickly. We'll go through it very quickly. All right, so let's see. ServiceNow, Databricks isn't public, so I don't have the information. So ServiceNow, okay. The ticker's what, now on that? Okay. So I guess everybody's going to get a glimpse on how I do this. Let's bring up this spreadsheet. And it's pretty simple on how I build this out to find the valuations. All right, everybody can see those numbers. So all right, CRM. And you know what? I'm going to put a link to this for the Milk Gang after the show. I'm going to make a post on YouTube, and I'll make this file shareable so everybody has everything with these valuations in case you want to download it and play with it. So these are all trailing 12-month numbers. So I always go by the trailing 12, and if I want to do additional analysis, I go and I do probably the past 2 years on the quarterlies and look at growth rates and stuff. And I'm sure that there are products that do this real time, but I like doing it on my own. I don't know why, but it helps me remember the numbers. So, I mean, look, this is a company, 13.5 billion in cash from operations is being generated. This is incredible. And they're only spending just over $500 million on CapEx. I mean, huge free cash flow number right now. Huge. Big profitability. These are really interesting numbers. And one of the things I am going to build out after this is how they allocate their free cash flow, because I think that's an important visual, is they are allocating a lot in buybacks and dividends. So let's bring up now. Maybe we should do Adobe also. Even after what I just saw with Adobe, I don't know, a little scared for them. And I don't follow ServiceNow much, so please forgive me if I'm not as informed with them. And I do like making everything look the same, so it's not OCD. It's just easier for when I read it, and certainly for when everybody else is looking at it on stream. That would be amazing if they were doing that much EBITDA. They're only doing 2.5. Operating income. All right, cash from ops. Okay, so let's look at how much more CRM is compared to now on what they're producing. So CRM is doing an additional 27.5 billion in revenue. They're doing an additional 9 billion EBITDA. I mean, they're just a much bigger company. An additional 9 billion in free cash flow, 5.5 billion net income. From a margin aspect, Salesforce has a better operating margin, better EBITDA margin, and a better profit margin, and a better free cash flow margin. The only margin that ServiceNow is better on is cash from operations margin. And then, I mean, this isn't even close. It's not even close. You're paying 21 times for Salesforce's EBITDA than ServiceNow's 71 times. Not even close. I mean, I would now look, this is one from a value standpoint. Salesforce, there's a lot more value to be unlocked than ServiceNow. Obviously, we need to look at growth rates, and we should throw ServiceNow into the valuation part and look at where they are. So let's do this. Let's We're going to put this on the same page. We don't need all the other companies. All right. So let's put this here. And we'll change Cisco to now. All right, everybody can see that. Let's get rid of this. All right, let me bring up their forward EPS, plug it in. I am going to make this available for everybody. It helps me with my research the way I have this set up. All right. So look, ServiceNow has more forward growth on EPS is expected than Salesforce. But at the same time, I would expect that their revenue is a fraction. It's about a quarter of what, not a quarter, but it's about a fifth. Now, what is that? Third? Yeah, around third. Coffee's not really kicked in yet. Got up at 10:30 today. I would expect them to have a little bit of a higher multiple based on this. But this isn't like Salesforce is growing their EPS by 5% over the next 2 years. This is a healthy margin. And when I look at where the multiples are, I don't think that the extra 15% of EPS growth over the next 2 years warrants this much larger of a valuation than Salesforce. All right, so I see some people are saying SAP. And humor me, why would SAP be the right comparable when SAP runs an ERP system? Salesforce does not run an ERP system. I mean, I'm happy to I'll do SAP real quick and throw it in there. I'm happy to. I'm just saying, I don't think that SAP, and the only reason I'm asking is because I looked at a bunch of different ERP systems. SAP, Microsoft, Oracle. Microsoft, no, it wouldn't be Microsoft. Gemini's saying SAP's, all right. Look, we'll do SAP right now. I'm happy to. This is the beautiful thing about building out spreadsheets. You can add whatever you want, whenever you want. Ooh, SAP is a really big company too. Sometimes we type fast with those zeros. All right. SAP is a little bigger on EBITDA, bigger on operating income. They don't produce nearly as much cash from operations as Salesforce does. Free cash flow is not nearly as big, and net income's a little bigger. So margins, better margin on operating income. You know what? We should freeze that. Where the hell's the freeze? I guess I'll do it later. I'll just for now put those there just as a placeholder. So yeah, look at this. The cash from operations margin for Salesforce, 33.5% compared to 20% for SAP. Free cash flow margin, 32% compared to 18%. And net income margin is a little less. I mean, on a multiple, you're paying less on price to EBITDA, a little bit more for operating income, and less on price to cash from operations, price to free cash flow, and price to net income. I mean, for me, Salesforce is still a better value than SAP. Just me. Just what I think. We'll throw SAP on the forward also real quick. SAP's got a lot of growth. The analyst community is expecting a lot of growth for SAP. Now, where it's trading, I'll tell you what, I'd rather allocate capital to SAP than freaking ServiceNow. SAP is interesting. I think there's probably a little bit more value to be unlocked with Salesforce, but SAP is really interesting. Thank you for bringing that to my attention. Yeah, I mean, look, they're one of the biggest ERP systems, so I'm not surprised. But I do think that Salesforce is going to be the dark horse for 2026. And I do think that we're going to, oh, you guys really want Palantir in here? You don't want to see that. Trust me, you don't want to see that. I don't want to do that. It's just going to get me, it's going to get me to go down a crazy tangent if we do that. But yeah, look, Salesforce, I think, is going to be very interesting. So I've been buying it. I stopped because I started a position in Microsoft, but I am planning on starting to buy Salesforce again, CRM. Wow, you guys really want to see where Palantir is on this? I'll give the people what they want. I will give the people what they want. Didn't even have to cut anything. I just, Google Sheets is not half bad. I'll tell you that right now. Google Sheets is not half bad. I guess we're going to get into a Palantir rant right now. I'm so dumb. I'm so dumb. And remember, I'm one of the original Palantir bulls, so I can talk as much shit about Palantir as I want without people having a reason to get mad at me. I've been bullish this company since the direct listing. I've owned it since the direct listing. I've written more bullish articles on Palantir than you'd be surprised. I recently became neutral. I mean, I don't know what to tell you. Let's just look at Palantir versus Salesforce. Let's do this down here. I really do think that you're going to be surprised at the differences. So Palantir has a market cap that's 100 $85 billion more than Salesforce. Yet they do 36 billion less revenue, 11 billion less EBITDA, 11.5 billion less from cash from operations, 11 billion less in free cash flow, and 6 billion less in net income. I'm sorry, that doesn't make sense. It just doesn't make sense. It doesn't make sense. I'm sorry. Palantir's got better margins. I'm not saying they don't, but I mean, look at these multiples. It's insane. It's insane. I think this will blow your mind too. So this is what the analyst community thinks they're going to do on EPS. So I think next year's EPS is pretty damn low. That's just my opinion. But at the same time, if the analyst community is correct, and I get it, Palantir is growing a lot quicker. But in all seriousness, they should be growing a lot quicker. Look at that. They should be growing a lot quicker. So oh, that's funny. Freaking, how do you drink coffee in the afternoon and still asleep? Tell me your secret. Obi-Wan Stephen Noby. That's hilarious. Hold on. Got somebody asking how long we're going to go for. We're going to go for a while, hopefully. So, yeah, look, Palantir's got a lot of growth. And if I build out a forward growth model on their revenue based on what I think it's going to be, because I think it's going to be more. And look, I'm going to show you a few things with Palantir. Okay. I love this company. Okay. Palantir is one of the greatest companies in existence. And to be fair, I am not a bear on Palantir, okay? I started writing about them in 2021, January. That's 2 months after they went public, okay? I was very bullish then when nobody wanted to be. I was very bullish. Amit is not texting me right now. It's somebody else. So oh God.
Steven.
We'll come back to the Palantir part.
What's going on, Steven?
What's up? What are you doing?
Is there an echo or no?
No, you're fine.
You got to ask the chat, Steven.
Well, hold on a minute. Is that the chef's cut or is that Jack Link's? What do you eat? What type of jerky is that?
Jack Link's.
Jack Link's. All right.
What's going on, Steven?
I don't know. Where are you?
Where are you? And I'm so sorry. Just kidding. I am on the way to smoke a fine cigar, and I need your opinion. Something very important.
You need
Sorry,
my
this is the first thing
opinion.
I've eaten all day. I'm very hungry.
I would go for a
Nicaraguan or Dominican, Steven?
no. We're going go Opus X Perfection.
Opus X is a nice Dominican cigar, Steven.
Go Opus X. I think you should go Opus X.
I don't know if I've actually had the Opus X. I don't know if I want to spend $45 today, Steven.
I got a bunch right behind me.
Well, why don't you humble brag?
I'm just saying, I got a bunch right behind me.
So what are you talking about with Palantir?
Just I get you want to hear the Palantir rant?
I heard you rip it on Salesforce, SAP, which is probably going to zero.
Don't do that.
Dude,
Actually,
SAP,
do
man,
that.
they're in trouble. I don't like it.
Whenever you say something's going to zero, it just goes up. So please say it's going to zero.
I do not like SAP. I'll tell you that much.
I never really looked at SAP until just now, and the numbers look interesting. But what I was saying about Palantir is I believe in all seriousness that I've earned the right to criticize them because I was writing bullish articles when people were calling them a black box and didn't understand the company. Since January 19, 2021, I've written a lot of bullish articles. I switched to neutral when Karp lost his mind, started throwing tantrums and banging his hands on the table. And then I went bullish again because the data changed. And I wrote a lot of bullish articles since I changed. But now, since the middle of 2024, I've been neutral just because I think the valuation's too much. And what I wanted to show everybody is since my last one, I mean, it's really gone sideways. But this is one of the best companies I've ever seen. I mean, when you look at the deals that they've done on the 1 million plus level, this is an S curve in growth quarter over quarter, a complete S curve. 204 deals over $1 million of revenue in Q3 2025, 91 of them more than 5 million, 53 of them more than $10 million. That's incredible statistics. What may be even more incredible is their customer count, okay? Their customer count is at 911 customers. And for the longest time, it was, is U.S. commercial and is commercial going to really grow? And are we going to get that inflection point? Yeah, we did. You look at where they were in Q2 2022. It's the blue bar in this. You have an inflection point. You have an S curve forming. 742 commercial customers. So I get it. And I'm not saying Palantir is a bad company. I'm a shareholder. I love this company. But at the same time, I do think they're expensive. And now look, their revenue is starting to really hit an S curve. And I think the point that is important for everybody to understand is that with all the deals that they have done, this is probably going to explode to the upside. And I would not be surprised if they're at 5 billion in revenue or more for 2026.
Oh, that'd be more.
I would not be surprised. And I wouldn't be surprised if they get to 6 or 6.5 billion in 2027. I would not be surprised. The S curve is going to come. They have a net dollar retention rate, I believe 132 or 134%. Hold on. 134% net dollar retention. And what that means is, and keep in mind, there is not a single deal included in this number over the past year. They haven't even begun to monetize all these contracts within a year. So they could really, and when I say S curve, I'm not talking about the stock price. I'm talking about the underlying business fundamentals of the company. So I understand why there's a lot of excitement with Palantir, and I think it's an incredible company. I do think it's very expensive, though, for where the market cap is. And this is where I guess I look at things differently than a lot of people, because when you look at the market cap of Palantir and Salesforce, Palantir's market cap is an additional $185 billion. Salesforce does 36 billion more in revenue, 11 billion more in EBITDA, 11.5 billion more in cash from ops, 11 billion more in free cash flow, and 6 billion more in net income. There's no world where Palantir should have a bigger market cap than Salesforce. There just isn't.
The thing that I'm most looking at, if revenue growth continues in the same trajectory, if all these things continue, the thing that I'm most looking at, which is now what Carp is talking about, is they want to maintain employees of about 3,800 people. They're currently at about 4,100, so they're actually going to reduce headcount, and they're going to try to increase U.S. commercial by 10x. So the thing that I think is giving a lot of people caution but optimism is, where is their free cash flow margin going to end up? Because if your underlying employee count is going to actually decrease and your total OPEX for the entire business and SG&A for the entire business is going to remain flat, if not potentially go down slightly, then that means every dollar of revenue, yes, there's a cost of the server, et cetera, depending on how the contract is written, whatever. But we've seen that the revenues that they're getting is 80 to 82, 83% gross margin. And the majority of the value of that now is going to go straight to the bottom line, because the fact that you have this flat operating expenditure, not on a percentage basis, but they're trying to keep OPEX entirely flat. And so to me, I think that that's where the most bullish part of the future is understanding, where does that free cash flow margin percentage end up? And we've seen periods where it's over 50% in a single quarter. I think that might actually end up being the norm as we continue to expand and mature the business. And so if that's the case, you could have a company that's only generating, let's say, 20 or even $25 billion in revenue, and actually getting anywhere between 10 and $15 billion worth of cash flow from operations and free cash flow. And you start putting a multiple on that, like that's pretty healthy. And that's not very far away. Like, we're talking, it could potentially get to 20 billion in revenue. I wouldn't be surprised within the next 10 years. And
So Matt,
so
think about this. Okay. You just said next 10 years. If Palantir was to 5x their revenue, okay, they would add 19.48 billion in revenue from here. Okay. So let's say they get to 20 billion, where you were saying 19.48 billion. We'll just make it 20 billion. At the current margins that they're
that's the
at,
thing, Steven, you can't use the current margins, because we just
hold
talked
on,
about,
the current free
all right,
cash
I'll
flow
let you go.
margin, the current free cash flow margin is 46%. So if you want me to increase it to 55%, I'm happy to. Would you like me to?
Yeah. And I honestly, that now that you're talking about it, it might even be too low, but 55, yeah, sounds.
You think that they can get past 55% free cash flow
Well,
margin?
let you think about it. All right, so let's walk through the numbers. So if they're 80 to 82% is gross ops, and then they're going to keep SG&A flat, which I don't know what the current run rate of the company is for SG&A, but then you start looking at, well, if then you just basically would take that 80% gross margin, subtract out what that current OPEX for the company is, of course, put in some inflation, et cetera, because that's going to happen to be there. And then you could probably back calculate what the free cash flow margin looks like, because there's not a lot of CapEx that needs to go into the business. So, I mean, easily the company's, as you've already stated, is going to get to the 55% free cash flow margin percentage. But where does it stop? And I think that that's where the excitement lies. Is
Okay.
Maybe
So
climb
let's
to
use what
60,
you're saying.
65. I don't know.
Let's say they get to 55% free cash flow margin. That would put them at 11 billion in free cash flow on 20 billion of revenue, which could happen. The problem is, even if they 5x their freaking revenue and get a 55% free cash flow margin, they're still not doing as much free cash flow as Salesforce. And it's still a $185 billion additional on the market cap for today's profitability. And if we're going to say it's going to take 5 to 10 years, because we really don't know, it could take less than 10 years. So let's say 5 to 10 years, you're paying for all that forward growth today on the market cap. This company should not be more than 200 billion, probably close to 125 billion market cap for the company it is today. And that's the reality.
I don't disagree with you, Steven. The thing that's hard for me to comprehend is how do we go to a $100 billion company? Because not $100 billion company, $100 billion run rate. Because in reality, I'm
We just lost Matty. I wonder if he hit something on his thing.
my
You
back.
back?
My back, Steven.
You're back. So I didn't say 100 billion run rate. I said 150 billion market cap. Oh, Matty's having problems, everyone. All right, we'll see when Matty comes back. But look, this was the Palantir rant. I love the company. I'm a shareholder. I'm not getting out of it. But oh wait, looks like he may be back. Is he back?
Sorry, I keep getting these phone calls from Vegas because they want me to hemorrhage cash, and they won't stop calling me. So that was Vegas calling.
We can't hear you, Matt. If you can hear me, we can't hear you. Your cell service must be spotty. All right. Yeah, he sounds like he's in a tunnel. We're not going to keep him on there. But look, that's my analysis on Palantir. I think it's a phenomenal company. And I do think eventually they will be $1 trillion market cap. The reality is, I don't know when that's going to happen. Let's try this again. Not any better. You sound like RoboCop. Yeah, I don't know. Matty Money from the road is not as good as Matty Money from his office. So we'll see what happens. I don't want Palantir to go down because I don't want people to lose money. I just think that blindly going in right now is because, and Matt's texting me now, effing people from Vegas won't stop calling them. But I just think people should be aware of the numbers. But that's how Palantir stacks up against CRM. So let's try him one more time. Matt Money, are you there? Matty Money. All right. All right. I'm just going to text them and let them know all good, have fun. Somebody else is joining in a little bit. But yeah, so like I said, Salesforce is the dark horse for me. I really like them. I think they're being undervalued. I think people are disrespecting them based on growth of 10 or 11% year over year. It's a $40 billion company. So we'll see what happens. I'm not saying Salesforce is going to double, but I wouldn't be surprised if Salesforce doesn't catch a bid and get over 350. So we'll see. So next week, let me take some coffee. Coffee in the afternoon is freaking great, everybody. I got to tell you, it's freaking great. So we got the FOMC meeting. We know where I stand on that. I want to see rates drop. So December 9th and 10th. Oh, Joe, Jace, thank you so much. I truly appreciate it. Thoughts on buy and holding QQQI and SPYI instead of VOO in my traditional IRA? Listen, can't give you an opinion on that. This is what I will tell you. 100% of my retirement in my 401 is in an S&P 500 index fund. I personally hold QQQI and SPYI on the income side of my portfolio. Outside of it, I like both of those funds. To me, they are not a replacement for an S&P 500 index fund. I hope that can answer your question. So look, we'll see what Jay Powell says on Wednesday at the conference. I know Amit will be streaming it. I'm sure other people will be streaming it. So we'll see what everybody thinks. I mean, if we get a surprise and Jay Powell turns dovish, we're off to the races, people. I may not be bullish enough. Okay. Now, if he leans hawkish and doesn't cut, I do think we're going 62.50. So we'll see. So on Tuesday, December 9th, we get the JOLTS survey, which is job openings and labor turnover. So that'll be at 10 a.m. on Tuesday morning. And it's important because you get your job openings versus the quitting rate or resignation rate, whatever you want to say. On Wednesday, December 10th, we get the employment cost index for Q3. We get how wage inflation is going. Thursday, December 11th, we get weekly jobless claims and state employment numbers. And let's see. The following week, we're going to get CPI on December 18th. We got earnings. We got Oracle, we got Broadcom, we got GameStop. I want to go through each one. But before I do, Mamba Mentality Forever 24. Love the name. Kobe Bryant is my second favorite basketball player ever. He is one of my top 5 athletes ever. I think that his work ethic is unmatched. And the guy was simply unbelievable. Love the name of I love the name. I just spent the last day going over NVIDIA thesis. It is undervalued here, Steve. Jay Powell side, 230 mid next year, in my opinion. I agree. Tanner and I spent a good amount of time on Wednesday night talking about this. NVIDIA is, to me, so undervalued here. It doesn't make sense. And I guess before we get into Oracle, Broadcom, and GameStop, I guess we're going to go on the NVIDIA rant. Let's phrase this, all right? I'm going to build something out let me know, you know what? Let me get a poll up real quick. I have a question for everybody. And instead of me just reading yes and no, let me put a poll out there. And please answer this. I really appreciate it. All right. So the poll is going to be, did you enjoy me building the spreadsheet out live? So if you could answer this, I would appreciate it, because if an overwhelming amount of people say yes, I'll do more content where we build things together instead of me coming out with everything pre-made, and we'll look at the numbers together and we can add things in. Wow. All right. A lot of people are saying they like it. I guess we're going to do more content like this. I'm going to keep the poll open. We'll see where it is. And I guess we'll build this out live for everybody since it seems like everybody likes it. The iron, I see the super chat. Thank you. I will get to that next. So, all right, let's do this. Let's put this on a new tab and then I'll share it. I'll build it the way that I want to build it. I'm also about to get a little sarcastic, everybody. I'm about to get a little sarcastic. We're going to get a little loose right now. We can get a little loose. If there's other companies you want me to add in, I'll add them in. But in all seriousness, why on earth would anybody want to buy Walmart or freaking Costco over NVIDIA? I mean, seriously. You know what I mean? Like, it just doesn't make sense. I should find the Josh Brown clip from the other day. In fact, I am going to find the Josh Brown clip from the other day while I leave that up because it's just so freaking ridiculous that people legitimately think that Costco is undervalued. Costco is trading at 36.5 times 2027 earnings while NVIDIA trades under 20 times. Like, what are we doing? What are we doing? It doesn't make any sense. Maybe I'm stupid. Maybe I am stupid, but I thought that we were supposed to be paying a good value for forward growth. I thought that that's what we were supposed to be doing, a good value for forward growth. I mean, is that not what we were supposed to be doing as investors? But this is now getting ridiculous where Costco, a company that has no margins, I mean, in all seriousness, they have no margins. 3% profit margin is freaking crazy. Okay. It's not inflation proof. They have serious headline risk from Amazon. If Amazon ever decides to get into their space of big bulk items, they can't compete. And then you start talking about where Amazon is with deliveries versus Costco. I mean, come on. And we're going to say that Costco is a better value here than NVIDIA? How are we going to say that? It doesn't make any freaking sense. To me, that doesn't make any sense at all. So I'm just finding the clip real quick. So just give me a moment. All right, here we go. Found the clip. Let's watch this, and then we'll get into the other stuff. But yeah, this is insane. Like, I'm sorry, NVIDIA should not be valued less than Coca-Cola, Walmart, or Costco. They just shouldn't be. So finally, and I know that Josh Brown is a big NVIDIA fan, and I'm sure he said this before, but thank God somebody else is freaking willing to say this publicly.
What's like the most obvious thing that you think is going to happen that people still aren't expecting, even though it's obvious, like kind of joking around. And but the truth is they're going to buy these Max 7 stocks. And I know how badly people want there to be a new narrative. I know how sick and tired people are of seeing the same 10 stocks at the top of the leaderboard quarter after quarter, year after year. And I understand how people went overweight, healthcare and energy and staples and some of the other areas that started to rally in late November as the AI story started to get a little bit shakier. But like in the end, these are the biggest, most liquid stocks, and contra the bubble narrative, they're not even expensive. Meta is at 22 times forward PE. Like, what are we talking about? You're going to tell me Costco at 45 is cheaper? NVDA is the second cheapest stock in the Mag 7. It's got a forward PE now at 24. And I understand all the stories about competition, et cetera, not dismissing that. But again, this is the best company on earth, and it's 24 times forward earnings, a multiple you have never been able to pay for a name with execution at this level. So I really feel, Judge, we had this huge momentum swing on November 20th. Only 4.6% of all the names in the XLK sector spider were above their 10-day moving average. Today, that's 86%. That's the highest since July. These names are being accumulated. And I feel like second verse, same as the first. Everyone gets how this year is going to end. I know people want a different narrative. I just don't think you're going to get it.
So, I mean, when it comes down to it, I'm in full agreement with him. And NVIDIA is super interesting here. They're projecting to do $65 billion in revenue next quarter. I mean, at their margins, they'll be at a run rate of about $125 billion net income next year. And that's assuming no forward growth. So when we look at where CapEx is, and we look at everything else, I agree. I mean, I don't even think 230 is out of the question for next year, to be quite honest with you. So I'm in agreement. The iron oxide, thank you so much. Thoughts on Meta 670 last week was good. I mean, look, you guys know I'm a big Meta fanboy. I've been a Meta fanboy, and I think Zuckerberg has earned the right to spend on Reality Labs. And I had said Wednesday night, all he needs to do is come out and say they're shifting some of the spend to AI and create a narrative that they're going to curtail Reality Labs a little bit. He ended up doing it the next day, and the stock shot up. I think it's the most undervalued right now, or the second most undervalued next to NVIDIA. It's trading at less than 20 times forward. And I think freaking Meta is a great company that has no competition. And I just think it's going to get bigger and bigger. I mean, if we look at Meta, if we put Meta at 1,000, are you ready for what these numbers are going to look like? And this is based on what the current projections are. We put a Meta at 1,000 a share. Still less than 30 times freaking earnings. I mean, 1,000 a share, it's 29.75 times 2027 earnings, when Walmart and Costco are trading over 35 times. So at Meta at 1,000, is it still expensive? I don't think so. So yes, I really like freaking Meta here. Just saying. I like Meta. What else can I say? Let's see. All right. I am going to move into Oracle, Broadcom, and GameStop. So Oracle earnings coming out. This is really big because they've issued debt. And I think the conference call is going to be so important around AI in the data center. Now, here's the crazy part. I just started covering Oracle. And I want to go back to that article. So let me bring it up and then we'll share it. So I actually called Oracle when it was around 120, right before that investors should be more bullish after the decline. And it shot up. I mean, I thought it was really undervalued there. Now, did it deserve to go all the way up to 3 something? I don't know. But it fell a lot. I mean, it's down a lot. I mean, if we look at a freaking chart, it fell a lot. Now, great margins. I mean, great margins on profitability. This is one of the things that I really liked. The amount that they did in repurchases and what they're paying to the dividend, they are truly doing a ton of return of capital. Now, here's the problem. $11 billion on the balance sheet in cash, $82 billion in debt. And I don't think that that includes the most recent bond offering that they did. Is I think that happened this quarter, and that's the numbers will change next week. I mean, that's not good. Now, how much EBITDA do they do? They got call it 82 billion in debt long term. What's the EBITDA? So 3.7 times debt to EBITDA. Let's see how that changes. I mean, look, Oracle's not going away, but it's certainly not the company that it was after this latest offering. But I shouldn't say that till we see the new numbers. But look, no free cash flow. Okay. Depending on what the new allocation looks like, they're not going to be able to do a ton of buybacks. So what does the buybacks cost them? They've only done 611 million. I mean, look at how this is scaled down. They're going to stop the buybacks, most likely. The dividends, I don't think they're going to stop the dividend, but I mean, I wouldn't be surprised, but I don't think they will. I got to see the new numbers. This is going to be a big set the tone for the market for AI, because the AI bears are probably salivating right now, coming out of the woodwork, waiting for Oracle to report so they can say, I told you so. They're overspending. But you know what? This is the one company, they're not even in the spectacular six. So AI as a bubble is going to be front and center next week because of Oracle. But what the moron bears don't realize is the other four are the ones you got to care about, not Oracle. I mean, if I build Oracle into the CapEx stuff, give me a sec. We'll do it live. Just let me find the correct one. All right. We're going to do this one live, and we're going to put Oracle in here. We're going to see how things shape out. Oh my God. Can't type. Cash from ops. What the hell is going on here? Why? Oh, I have shit. Shit. I have a sell hidden somewhere. All right. We'll do it this way. So Oracle does a fraction of the EBITDA, a fraction of the cash from ops, negative free cash flow. I mean, you can't even put them in the same category as these companies. I don't even think it's worth it. I really don't. What do I have? There's another one with the debt. So let's put them in here with the net liquidity, and let's look at the positions. So, oh, I got Oracle in there. When the hell did I do that? I don't even remember putting Oracle in here, everyone. But look at this net liquidity position. I mean, negative $69 billion. Negative $69 billion when you zero out cash and short-term investments, long-term investments from long-term debt. Do you see a net liquidity position in negative from the other four? No. So let the AI bears come. Let them freaking use Oracle as their new poster child of the I told you so. Let them make their freaking picket signs because it's a ridiculous argument. It's an absolutely ridiculous argument. So they don't even, when you look at the CapEx, they're a speckle of the CapEx spend. Doesn't matter. Is Chris Patel in here? What's going on, Chris? Hope the trip's going well. So I fully expect the AI bears to come out during the week after Oracle reports, especially since we know the debt level is going to change because the debt level has not increased on any of the sheets due to the bond offering they did. I am interested to see what type of cash from ops they're producing and what the new numbers are, but I'm fully ready for the narrative to start up again, and I'm going to have to respond on X with a freaking 2,000 word post, as I normally do to this stuff. So that'll probably come out this week. So we'll see. Oracle's still a great company, but I think I think the combination, if Powell does not cut, and if the Fed does not cut, and if Oracle comes out with mixed earnings and bears try to latch on to their debt load, it could be a rough week for big tech, which would be good for long-term investors because in the end, it doesn't really matter too much. But, we'll see what happens. Broadcom's reporting. Broadcom is a phenomenal company. I think they're a little overvalued, but I think it's going to be an important one because I fully expect them to discuss how they're building the TPUs with Alphabet, the Meta deal, and they're just a good indicator of where things are going. And if Broadcom puts up really good numbers, it should be very bullish NVIDIA. So we'll see. GameStop is also reporting the ultimate meme stock. I'm not in it. I really don't think a lot of people here are in it. But what I am interested in is more from the alternative asset world because I've had a thesis that they will become a nationalized card shop. So we'll see what happens. We will see what happens. Don't start calling Chris an NVIDIA bear. He's not an NVIDIA bear. He has a really good thesis about when the CapEx cycle is going to slow down. Now, the same way that I don't know when it's going to slow down, he doesn't know and no one else does. But the one thing that Chris and I agree on, and a lot of people agree on, is at some point it's going to slow down. So, I mean, you know, at some point it is going to slow down. So don't think that the NVIDIA cycle is lasting the next decade, because I don't see that it does. And Tevis looks like you just woke up.
I just finished recording a video. So
your eyes look so bloodshot.
Thanks, bro.
Like, dude, you feeling all right?
I'm okay.
Okay. It looks like you were at a UFC event. You got punched in the face last night.
I just come here to get insulted. Apparently, on this guy's stream, first thing he says is, "You look like shit, Tevis."
I'm just saying, you look like you haven't slept.
Well, maybe I haven't. All right.
Go get a Celsius.
Maybe I will. Maybe I'll do that right now.
Like it.
All right, hold on.
What's going on?
Hold on, let me do that.
See, he didn't even have his Celsius yet. The guy comes on, doesn't even have his freaking Celsius.
Bro, I haven't had a Celsius in the past 2 days. This is going to be my first one since like the Friday show.
Oh, wow.
Yeah.
How about the Hager news, man?
What? Oh, that he joined SoFi? Yeah, amazing.
Amazing. Good for him.
Man, can we talk about your thumbnail? It was the best thing I saw today. You made it with Nana Banana?
Dude, 13 seconds on Nana Banana.
Yeah, it's fantastic, bro.
I've
made so many things that I'm like, I shouldn't post this because I'll probably get sued by somebody.
Adobe is so fucked.
Adobe?
So fucked.
That's what you've been talking about? Adobe?
No, I'm just saying that like they better figure something out, because this is the worst this is ever going to be. And if you can do that by just putting a headshot on the attachment and typing 2 sentences, and that spits out in 13 seconds, what the hell are they going to have next year?
Yeah. Yeah. What is your chat saying?
The chat's amazing.
I fucking love these people, man. I love
them.
They're
great.
I love them. They're great. I just finished recording a video about Nebius.
So why don't you give me the deep dive, because I'm interested.
On Nebius?
Or give me the pitch. It's
Dude,
between
did you see? I just closed the tabs. Did you see the Avride is now launching? So Avride is like one of their subsidiary companies. Nebius holds like a stake, and they partnered with Uber, and they're launching in Dallas now. They have a bunch of they have their equipment, and Uber is launching autonomous robotaxi rides. But the reason why it's interesting is that they're the only ones other than Waymo and Tesla. And Avride is like tiny, dude. They raised $375 million investment recently. And I just think that like they're playing this space against these $1 trillion companies. And you know what happened to Nebius when that news came out this week on Wednesday? Uber was up about 4%, and then Nebius was down about like 2 or 3%.
Interesting.
It's so stupid, man, because Nebius, the parent company, is $24 billion, and then they own a stake in Avride, and Avride is competing with Waymo and Tesla, like with the robotaxis, and they just get it's not priced in, and that I think is really interesting.
So are you still adding to Nebius?
No.
Okay.
No, dude, it's massive position. I don't feel like I'm really happy with the stake that I have, but I'm not anymore. It's my second largest position behind SoFi, man.
I'm a little sad that we're not going to be able to get Chris's perspective on things, but I'm super happy that he's joining the company.
Oh, Chris Hager? Yeah. Yeah, and I think it's going to be great, man, because I think it's going to be a fantastic bridge to retail. And obviously, I don't want Chris, I don't want to implicate Chris in anything that will risk his job. That's the last thing that I want to do. But I also think that just his presence there and him having been a retail content creator for this company, he will always have that lens in the back of his mind around when press releases come out, how it can be perceived by the market. And he'll be in the room to basically say, hey guys, how about we do X or Y or Z? Let's do an investor day. Let's do this and that. So I think it's going to be really helpful for SoFi to increase their awareness and communication with the retail investors, to increase the transparency levels overall as much as they possibly can. I mean, that's the bullish take.
Super bullish. I really hope he can get them to do an investor day every year. I think it's so important. I think it is, in today's day and age, with the amount of people on the retail side that follow these companies on X, through us, through Seeking Alpha, through YouTube, whatever it is, a lot of people want the information. And I think that management needs to stop catering and only not that they do, but you look what Vlad does. Vlad will have full-blown investor days and then ask retail to submit questions. I mean, I really want Noto to start doing this, because there's questions. In all seriousness, you, me, Tanner, and Roy, because I can't say Chris anymore because he's no longer part of it. I feel like the four of us follow this company more than the analysts that actually cover this company. And we would come up with more impactful questions than them. Maybe not Dan, but everybody else, excluding Dan, probably doesn't follow this company nearly as closely as us.
Agreed. And Chris was great, man, because Chris actually went deeper into the numbers. And, I won't pretend to say I'll do an analysis like Chris will, because I will talk more about the perception about certain moves and try to reason from first principles around why they could have made a decision like this and what are the repercussions. But Chris will be like, hey, this is how, corporate revenue breaks down, and here's all the components, and he'll have the super technical financial, reasoning to his analysis. And it's just, the community is definitely going to miss him, I feel.
Well, let's not forget, it's because of him that SoFi added those slides about the CECL and everything else. I mean, this is a guy who did so much due diligence that the CFO of the company added an additional slide in the earnings report. I mean, that's saying something for the level of due diligence he was doing on the debt stack and stuff.
Yeah, absolutely.
So yes, super happy.
It's interesting. So somebody said, Jurgen said, is Tevis jealous of Chris? Dude, I'm absolutely so very happy for my friend to get the opportunity. And I was actually having this conversation with an IRL person the other day. I said hey, I've got to that point of YouTube where if any job would force me to quit YouTube, I probably wouldn't take that job. Maybe if you had asked me last year or 2 years ago, before I'd reached some inflection tipping point around hey, we'll give you this job, but you can't create any content. I'd be like, all right, cool. That's not a problem. And I would have dropped it. But I feel like I wouldn't be able to drop the YouTube stuff. So I just think that's a crazy trade to make. Because even for Chris, I know he really enjoyed the content side of things, even though it was not to the same degree. He had a small YouTube channel that he would cover earnings with us and be a guest here and there. He wasn't making 3-4 videos a week, but it's not without its consequences, right? I know he probably had a tough decision to make. I don't think I would have made it, if that makes sense.
Makes sense. Makes sense. I mean, look, for everybody in the chat, we're super happy for Chris Hager, and I don't think there's a single person out of our group that's jealous at any means. We're all super happy. And as a shareholder of the company, I said this earlier, I think that he's a great addition to the team, and he's going to bring a level of insights there that is needed, because I have been probably the loudest in criticizing them about their communication over the past year. Mm-hmm. So I'm very happy about it.
Yeah. And as a shareholder, this is good news for us all. You know, like it's just this is in a way everything we've been asking from management, because you now have a person that cares about retail's interests who's a voice in the room.
Agreed. So, Jay Powell, what do you think? We're getting a cut?
Oh yeah. No, you're definitely getting a cut. I think
Alright.
like Polymarket and CME FedWatch has been correct way more often than they're not, this year at least. So they're pricing it what, like 87% or something?
Something
For a
like
cut?
that, yeah.
Yeah, I think you're gonna get it.
That'd be
Now,
good.
if you don't get a cut, that's gonna be quite negative for the market.
It's going to be very negative, not quite negative.
Dude, did you see? You probably haven't seen this, but I made my BM&R video yesterday, and one of the clips in there was Tom Lee. He'd done this like presentation. Man, I wish I could find the tweet right now, but it's like probably deleted the tab. But basically, he was looking at the last time QT ended and what happened with the index. Does any of this ring a bell at all? Okay, so he mapped out the last time that QT ended and what it did for the market, and the conclusion that he came to was in the 16 days following QT ending, the market rallied 17%, like the S&P index rallied 17%. We have about 16 and a half trading days left until the end of the year into a Santa Claus rally. I think one of them might Christmas or Christmas Eve or whatever might be a half day. So that's why. So QT ended. Of course, that doesn't necessarily mean that QE is going to be starting immediately, but it does signal that, you know, from a liquidity perspective, there's going to be a more risk on type of environment coinciding with a Santa Claus rally at the end of the year. If we see anything like that, I'm not saying, you know, 17% in 16 days, but if we see anything like that, then I think we should be in a pretty good spot for the rest of the year.
Okay. I mean, look, I think we're getting a cut. Waller came out. Bowman came out. Johnson came out. So they're all saying that reduction in rates is the way to go. So I talked about in the beginning of the stream that I really think we're going to get a cut. And for the people that want to hear my thoughts on unemployment, I'm scared shitless about it. Because we're at 4.4%, and while that's not historically a high level, we're up 1%. Whenever you hit 1% or more, you've been in a recession or just started a recession. And with the productivity gains everybody's expecting with AI and robotics, they need lower rates to spur entrepreneurship in addition to allowing businesses to tap the debt markets to expand. It is still in a restrictive environment. So I'm very pro rate cuts. And I went through this last night. The Fed needs to stop walking a fine line between price stability and maximum employment. Maximum employment is always going to be more important. And we are not in a situation where inflation matters. Whether inflation is 2.5% or 3.5% does not fucking matter. If inflation was 15 or 20%, it's a different story. But if you're paying $102 or $103 next year for something, it doesn't matter. We need to make sure that we have a maximum environment for jobs. So that's my riff on that. I've talked about it a million times. They need to cut rates.
Yeah, and I think with Kevin Hassett announcement, like rates are I think he's gonna get pushed to cut rates as fast as possible in 2026. Sure, some people say like he's not like confirmed officially, but he's pretty much confirmed at this point, at least by Trump. You know.
So Tevez, I know you and I are kind of the resident degenerates. Chels is saying go Packers go 14-3. You have anything on this one or not?
Who are they playing?
Bears.
The Packers are playing the Bears,
Yeah.
and the Packers are winning.
14-3, second quarter, going into halftime.
I don't have any money on it. I lost all my money on the Bills today. So I don't have any thoughts on that. I don't think the Bears are going to win that, dude. Like, are you kidding me? Maybe you could argue like the Bears keep it within 2 touchdowns. You could make that argument, I guess.
I gotta tell you, I am so ready for freaking full-blown prediction markets on earnings and everything. Oh my God.
Yeah, the Bills won, but I had like a parlay and I missed the last leg, which was Brown 50 rushing yards, and he got 35, and so that sucked. I got Josh Allen passing yards. I got Cook rushing yards. I got Cook touchdown. Or no, did I miss Cook touchdown?
Dude, you love these ridiculous parlays.
Yeah. Well, it's because the odds are shit, dude. DraftKings doesn't give you odds. And so it forces me into bad trades.
Bad trades, he says. All right, so you obviously have a life and I do not have a life. Are you going out on New Year's Eve?
I don't even know what country I'm going to be in on New Year's Eve yet.
Like I said, everybody, he clearly has a life. I don't.
Yeah, I have 2 options. I got to probably make a decision this upcoming week.
Okay. Well, I'm going to be hosting a New Year's Eve stream.
I definitely won't be there.
And I want to do the YouTube 250. I want to make a new index.
Okay.
And what I want to do, like this is something I'm going back and forth with.
Don't do 250. Do 50.
So originally I wanted to do 500 and destroy the S&P and create a.
Can I help with this?
Yes, you can. So here's what I wanted to do. I was going to do a YouTube 500, then a YouTube 250, and then buy every stock in it.
Okay.
And obviously I would have to do it on a account that has fractional shares because I'm not doing one of everything. It would just get too I'd have to sell too much shit to do it. But I want to make my own like legit index.
Yeah.
And put it up against the S&P for all of 2026. So I wanted to get everybody together and in addition to this guy and make the YouTube 250 or whatever it is, because I looked at the S&P 500 the other day. The amount of dead fucking weight in the S&P 500 when you look at the bottom 100 companies is so insane. Have either of you actually looked at the bottom 100 companies in the S&P recently?
No. Dude, I don't even know why they don't rebalance more heavily. Like, just get rid of 10, add 10. Or, like, because every 3 months for one company, it's just, it feels too slow.
I mean, when I saw some of these companies that are in the fucking bottom portion of the S&P 500, look at this. Like, Alexandria Real Estate's an S&P 500 company. Like, what are we doing? Federal Realty Investment Trust?
Yo, Match Group is that low? Jeez.
And SoFi is not in here. I mean, seriously.
I think a lot of them are going to get downgraded down to mid cap soon enough. You know, the other thing is volatility. Sometimes you can't, as much as I agree with you guys, sometimes volatility can get the best of a lot of these companies, and you don't want to constantly move things up and down just because the market's volatile, right? Like look at FactSet, FDS, right? FactSet right now is 10 billion, but about less than a few months ago, this thing was way more. So like I said, I sort of agree with not just kicking people out and moving them in. And then also at the same time, remember the impact that you're going to have on index level inflows and outflows is going to be pretty significant. So,
I mean, like Hasbro, I'm shocked they're even still in the S&P. But there's a lot of companies in here that I am shocked are in here. And I really want to create my own index and then allocate capital toward it, whatever amount it's going to be, and let it ride in 2026 and make a whole series around it. So
Okay.
that
the one thing I'm a little bit sort of worried about with the S&P is that because it's like the valuations are a little bit geared, well, not a little bit, they're a lot geared towards just the top 10 companies right now. So if you look from a market cap standpoint, you've got a lot of concentration risk all the way at the top. So any move by NVIDIA, any move by Google, Microsoft, all of them can have a much bigger proportional move to upside or downside. And because all the indexes are always, heavily weighted towards it, you can get a little bit of valuation. I don't know, what do you call it? But valuation creep just because people are included in the S&P or not. So, yeah.
So here's what I think for your index, Steve. I think you're signing yourself up for a headache if you make it a lot of names. I think if you do get buy-in, here's how I would probably do it. I would probably get 10 YouTubers to propose 10 names each, and then you just do the YouTube 100, or even the YouTube 50, and then you get 10 people with 5 names each, and you just go equal weight across the entire index. And I think that could be fun, but I don't know. That's probably fewer names is probably better to keep track. Yeah, equal weighted 50 names is probably good.
I'm building something right now, and I'm going to ask both of you to guess something. Oh my God, this is insane. All right, hold on. What do you think the top 10 companies in the S&P are equal to how many of the bottom 490?
The top 10?
Yeah.
The top 10 the top 10, if you combine them all together, make about 40% of the total S&P 500. So 40%. So
Tevis,
NVIDIA alone's like 10% of the S&P 500.
I think top 10, not top 7 or top 5.
Top 10, just top 10 companies.
I think it's more than 40%.
I'm actually doing it right now.
I'll go 50%.
All right.
Because usually it's like the Mag 7 is 40% or whatever, but then it's the next 3 over, I would imagine.
So it's actually the top. It's a top. So Google, because they have 2 fucking tickers, I gotta take one of those tickers out because I can't fucking count. So hold on. So the top 10 companies is $25.45 trillion market cap.
Jesus.
Check this out. Here we go. So this is down to 108. Okay. Let's go to 115. It's bigger than the next 120 companies in the S&P. I mean, that's insane.
This is the problem that I see with this thing, though, man. There are some companies up here, their business models are cyclical, and so if the cycle tends to go the other way and things, valuations start to drop, it really impacts the entire index a lot more. I know a lot of people like this whole thing with Chris being an NVIDIA bear. I'm not an NVIDIA bear, but I'm a realist in that I know that the business itself is a cyclical business. There are points where you're going to have a huge amount of growth, and then there's points where growth kind of slows down, and that valuation is going to slow down. So then, what are you going to give a market cap to NVIDIA at? you know? So it's one of those things. Same thing with a lot of other names like Eli Lilly. Eli Lilly is worth almost $1 trillion right now because of its Manjaro product is just absolutely exploding. But Manjaro is going to have an expiration date eventually, right? When the expiration comes, what are you going to do? You know, so pharma is another thing. So pharma has this, J&J is almost 500 billion. AbbVie is almost 400 billion. A lot of these companies, they have patent expirations that are coming up. And look at Pfizer. At one point, what was the market cap of Pfizer and what is it today?
Yeah, Pfizer's dropped a lot.
You know, so this is the challenge with sometimes like over concentration, like CVX, which is Chevron, you know. At one point, I think ExxonMobil at one point was the most valuable company in the
It's
country.
about 500 billion.
Right. And now because oil prices are down, it's back down again. So it's like, you know, the market's always going to go up and down. But I think the one thing a lot of the people that are saying like, oh, they need to rebalance this. Like how often do you want to rebalance it? Every other week? Because it'll kind of, it'll destroy the inflows and outflows, like getting to real valuation. And then you'll just see people, I don't know, the volatility would be too much in my opinion. So.
Yeah, but I feel like there's so much dead weight in here. And I think that's why a lot of people want the NASDAQ instead, but 101 companies or whatever it is just not enough. And it's too heavy technology. For me, I think there's a lot of dead weight in the S&P. And I think there could be a better overall index. And I'm with Chris. I'm not happy that NVIDIA is 8% of the S&P. Because if God forbid they miss their fucking numbers or something happens, it's a really big deal for the entire market. I would rather no company exceed 5% of the index.
Yeah. I mean, that's one of the reasons why some people like it. Can you put up a chart comparing RSP and SPY, which RSP is
yes.
The RSP is equal weighted S&P 500 and SPY is market cap weighted. So if you look historically, the performance has been pretty comparable. But then all of a sudden, because of you've seen this rise in the mega caps, you've seen this kind of divergence happen. And I think eventually that divergence will eventually close, you know?
So this is year to date. SPY is outperformed by 7%. And if we look at 5 years, it's outperformed by 35%.
Yeah.
I don't understand your argument, Steve. Like you said both opposing things. Like on one side you said there's so many shit companies of the S&P, and on the other side you said, well, it's overweight tech and it's getting to like a precarious position. Well, like, yeah, obviously, because it's market cap weighted. You can't hurt the best companies or hold them back just to keep some arbitrary weighting, because otherwise the index as a whole is going to underperform because you're still going to have all the companies that are underperforming, right? So like,
yeah, I'm fine with it being overweight tech, but I think 8-9% one position for the entire index is a little much just from a risk perspective. That's all.
It's concentration risk. It's a lot of concentration risk. I mean, God forbid anything happens to AI and all of these companies, they take a bath. All of a sudden now the entire index drops. And the challenge is because the SPY is becoming a lot more ubiquitous with investors thinking that, hey, I can just buy the index. Dude, like even in this whole Invest America thing, while I agree with the concept and I like the idea of people investing, I think you're getting people to invest in America at the tippy top. And it's like one of those things that's a little bit, it could create an entire generation of people if, let's say, something happens and then the market drops off and then you have an entire generation of people kind of like averse to the stock market again. You know, I don't know if that'll ever happen, but like this would have been perfect to launch during 2008, 2009, when, you know, you actually needed to boost liquidity into the system. You know, like, but if you had done this in 2008, 2009, bro, we wouldn't even have a social security problem right now. Everyone would be up 3x, 4x, 5x on all of their money. And at the time, you actually needed to inject liquidity into the economy and the market anyway. PEs in 2008, 2009 were like single digits for like most of the market. It was insane.
Maddie is texting me pictures of the cigars he's smoking right now.
Is he?
He's a good role model, that guy. Good role model.
All right, I gotta go soon, so let's continue our conversation around this index you want to start, and then I can bounce.
Okay, so my thought for a series is for 20, because we're so close to 2026, that I'm going to build an index, do a weekly video on it, and figure out an amount of money to put in and allocate that capital to each share. And then just track it against the S&P and do a whole series on it.
So you want to create a portfolio that benchmarks against the S&P, but at the same time, are
No,
you going to actively move things, or are you just
the
going to
new
leave
and
it?
improved S&P.
So
And
it's
see
like
if I can
S&P
actually
plus.
beat it.
S&P plus, S&P prime.
S&P prime. I'm trademarking that. That's great.
Yeah, it's
Yeah.
the SPY, but the Y stands for YouTubers.
That's right.
Okay. S&P YouTubers. Not bad. That's not a bad idea. The question is, is it going to be actively or is it going to be passive?
No, I think we rebalance it every quarter. And the idea is that I think our group of people can come up with an index that should easily beat the S&P and quite possibly beat the Qs.
Maybe.
That's hard, man, because like it depends on how many names are going to be in it. You know, if there's 10 names, it's like, okay, well, you can easily do it with 10 names or fall on your face, but 100 names, we'll see. So it depends on what you're.
No, I'm legitimately thinking 200, 250 names.
250 names?
Yeah, it can't. Listen, if we do 20 names, we all know what it's going to be. It can't be that.
The problem, Steve, 250 is way too many. Because like, let's say you have 10 people. Okay, so how many people you want to like suggest names? If you have 10 people.
Oh,
right?
I'm thinking that it would just be the three of us, Matt, Tanner, Roy, Amit. That's it.
Three of us, Matt, Tanner, Roy, Amit. So you'd have 7 people?
Yeah. We build the YouTube 250.
Dude, 7 people for 250 names?
I mean,
it's
shit,
like
I already
35. It's like 35 unique names per person.
Dude, I already own like 150 positions.
I would think there's be so much overlap. You should probably just cut it down to 100. 100, like the NASDAQ 100 works. Yeah.
Yeah, I guess we
even
could
50.
do NASDAQ 100. I gotta find a platform that can do fractional shares, though. Otherwise,
I did want to ask Tevis about that. Tevis, did you buy Meta? Have you been loading up on Meta? Please tell me you have.
Yeah, no, I bought Meta. I haven't been loading up on Meta. I want to be buying more.
Dude.
But I'm so strapped for cash, dude. So that's the only reason I bought some. And I want to buy more. I want to double up real quick.
Out of all the companies in the market right now, I think the thing did you guys see the thing with JP Morgan, the cost of these models, like that chart that they just published? It was insane. The cost of models coming down. And I'm like, does no one else see? Like, can you pull it up, by the way? Like, I have to log into Twitter.
You're gonna have to find it because I don't know where it is.
Oh,
yeah, it's
I literally I have it. Hold on. Because I just talked about this 20 minutes ago on the Nebius video.
Yeah.
I have to.
So much of the value is moving towards distributors rather than just hanging around the model training companies. It's insane. So if you look at Google's business model has typically been search, right? It's a cost of search query. Yes, that's the perfect one. So cost of query, cost of search has basically been nothing, right? Pennies on the dollar. But if you look at AI to search for like 1 million tokens, it's rather expensive. So if you look at the cost per million, depending on the model sizes, look at what happened to ChatGPT 4 and ChatGPT 5 Nano. Look at that drop in cost. And it's the same thing with Grok, same thing with all of these guys, DeepSeek. It's insane, the drop in cost per million tokens. And I think the efficiency is just going to get better and better. So that means that AI is going to get incorporated into pretty much everyone's business model, but the main beneficiaries are going to be the people who have the highest level of access to distribution rather than just model themselves, right? So let's say right now you have a platform that has 1 billion users. You can serve up AI to them at nothing and charge them a crap ton, right? So think of Google right now, like being able to kind of almost replace their search with more AI centric search, and Meta can serve up ad content that's super cheap, and it's getting cheaper by the day. And the other thing is they're the only ones that have the capability to spend enough money to be able to support that ecosystem. And I don't know about you, but I don't know anyone else who's got that kind of distribution outside of maybe Google and Apple, to be honest, because Apple's got the devices. But it's like Apple, Google, Amazon does too via their ad platform on Amazon, like shopping, and even Microsoft. So I don't see any of the mega caps having any sort of issues going forward. But I think the one that's going to benefit the most is probably going to be Meta from this whole thing.
Did you see this? Hold on, let me throw this up. I posted this earlier yesterday. Steve, can you throw this up?
Yes, I can.
Did you see this, Chris? This is sensor tower data on MAUs across different LMs.
Did I tell you guys? I switched over to Google completely, to Gemini. It's so much better. I love it. Yep. I love it.
Yeah. The interesting thing here, and I sort of made a note for all of these, like ChatGPT more than 2x now. So from 358 to 810. Look at Copilot, man. 218. At the end of the year, it's at 212.
Yeah.
Like it was just pushed to everybody in their ecosystem, and it just failed to grow. Gemini has been like really quickly growing. Claude still the lowest on the list, despite the, it's held as like, oh, the best, for coding or whatnot. Grok, highest growing, but still very small, 34 million.
Yeah.
Have you tried Perplexity, Chris? I actually just I bought it, and I've been using it now for a lot of like research on stocks. It's pretty good. I really like it.
Is it? I haven't been using Perplexity. Claude, I've been able to use because I got like a trial membership from TrendSpider, because like some of the things that I wanted to incorporate into my investing was just being better with like technical analysis. And I've been like, I know the basics of technical analysis, just not like, oh my God, the highest levels that some people do. But with AI, it can sort of help identify technical patterns that usually are more human centric, right? Not to say that there's going to be any like, oh my God, I'm going to switch up my entire like investing strategy to using AI. Like, no, I'm definitely not do that. But what I am doing is using technical analysis to at least get better entries and exits for some of my positions, where I will use, alerts. And the thing is, so TrendSpider has this thing where it actually will text you like, hey, this just happened on this specific company on your watch list, or that just happened. Like, what do you want to do? And you want to look at it and blah, blah, blah. So I'll take a look. So it's a very interesting thing. But one of the things that I noticed is that you can actually select the model that you want to use for that detection algorithm. And one of the ones that they have is like, actually, I'll show you guys what I mean. Like, I'll just give you guys an example. This is not an endorsement of TrendSpider, by the way. This is just me saying, hey, look, this is something that I'm using, and it's been helpful.
I also want to ask you guys about these space data centers soon, because
Bezos, baby.
Well, Bezos, sure, but you also saw Sunder's comments on it, and then Sam wanting to have his own SpaceX competitor, which I thought was kind of funny.
Yeah. So this is basically TrendSpider. This is the thing for their for Meta. And one of the things that you can see is like MACD crossover happened over here. You can see this move down here. So RS, all the technical analysis said this was sold off, but then at the same time, you can kind of see that things are moving in the other direction. So one of the things that they have is something called Sidekick, where you can actually go to your custom indicator and then ask it to do stuff. So like, if I wanted to give me like, I don't know, like they have a bunch of stuff here. So it'll code it for you. And the cool thing about it is that let me see if I can actually present it. Like you can actually have a custom indicator on here if you really wanted. That's the basic gist of it. The other thing is like they have this other sidekick thing where you can ask it like different questions. So like let's say it's so funny that the first thing that's down here is Palantir. Like what is currently going on with Palantir? And the language model is Claude 4. So it's like you would just click on it and then it would do all the thinking and then give you the stuff. So I did like a meta weekly analysis one to just give me a breakdown of what's actually going on, you know. And so it said recent performance, blah blah blah. None of this stuff is stuff that I would tell anyone here, like, hey, use this as your standard benchmark. Definitely like fact check your own stuff, because I have noticed that they still hallucinate. But it does give you good technical analysis in that, you know, the technical analysis is like right there in front of you. So yeah. I don't know. Have you guys been using any like additional things to help you invest better or no?
Nope.
Just Perplexity. And so I see G10's comment there. I feel like whenever I've run the same query across Gemini and Perplexity, so I have ChatGPT Pro through my work, although I'm switching my team over to Gemini Pro, and then I personally pay for Gemini and Grok and Perplexity, and so I'll horse race them against each other. And whenever I have the same query, sometimes I'll find that Gemini has a better response, but Perplexity has a better format for me. It's formatted like a research report, and it has all the, what do you call them? It all has all the citations as well with links for all of the things that it gives me. And so I really like that whenever I'm structuring a video, because if I want to go to a citation for a Seeking Alpha article or whatever, I have all the links there, as opposed to just, you know, trying to find, okay, where did Gemini give me this answer from?
Yeah, I've been using it as a debt analysis tool as well. So what I'll do is I'll upload multiple quarterly and annual reports, and I'll ask it to like trend the data for me. So this way I don't have to piece it together. But once again, sometimes I have caught hallucinations, which scares me a little bit, because it's like, dude, the data's right there. Just stop hallucinating on shit that you shouldn't, you know? So I would say that anyone who does pure AI investing, you're gonna get caught off sides, because the AI does a good job of unlocking information, but it doesn't 100% not hallucinate. And the thing with investing is that you kind of need that accuracy factor in there. So yeah.
Steve, have you ever asked the AI what bets you should put on? It's actually pretty good. It has some pretty interesting results. So if you ask it like, hey, what's going to happen in the Packers-Bears game? It'll probably give you something not all that crazy.
I was using Gemini for pitcher comparison and wind velocities and that type of stuff for my baseball analysis.
Wind velocity.
You guys are going to be shocked by this. Check this out. So yesterday I was like looking at some facts on the UGA game that could give me like a little bit of an edge. I was like, is there something going on with the game that could help me predict? So it said, oh, the probability that Georgia's going to beat Alabama is like 53-5. I'm like, okay, great. But then I was like, are there any hidden things? And bro, it came up with this thesis that played out exactly how Gemini said it, which was kind of crazy. So it basically said Alabama won the game by converting unsustainable 68% of the time on their third downs. The reality on a per basis, Georgia dominated the first game, the edge of Alabama's, and then it gave you all the. I'm telling you, I wish I had bet money on Georgia, because I mean it gave some really good like analysis right here. Kicker Peyton Woodring is connecting 94 field goals. Struggled and only got 65. So basically it gave me like, it actually should be closer to 64 to 68 rather than it being 54%. So
I'm definitely going to do that now. I'm just going to put in $50 and I'm just going to screenshot all the NFL games and all the NBA games and all the NHL games for like tonight and be like, don't lose this money. I'll delete you if you lose this money.
So can I get both of your opinions on Netflix winning the bid for Warner Brothers Discovery?
Is that final?
Well, it's not final, but technically they won. That doesn't mean it's going to happen. A, do you think it's going to go through? B, do you think that this is good for the consumer? And C, do you have any predictions on something that would derail it? Because I got a lot of thoughts on this.
So I looked at the terms of the deal. The breakup fee is freaking insane.
$5.8 billion, baby.
Wow.
So basically, if the regulators don't approve it, then automatically, the deal goes off and Warner Brothers gets almost $5.8 billion. Now, this is the challenge that you're going to run into as a Netflix shareholder. This is going to be hanging over your head for the next year until this clears all the what is it called? All the regulatory hurdles, right?
And it's not just federal. You got state also in this.
Yeah, and I would think internationally it would be another thing too, right? They have to deal with the international portion of it. I really am trying to understand why Netflix needs to do this. I mean, they've got their own great content library. Getting the content library from Warner Brothers is not. I mean, they have some really great things too. I'm not gonna lie. Like Warner Brothers
they're probably out of ideas, Chris. Like, if you can't have originals where you can grow organically, you're going to try to grow inorganically.
Just stop. The thing that I would give advice to guys like Netflix, just stop trying to DEI everything, dude. There's so many great like genres like for things, but they throw a lot of DEI into it and they try to be extra inclusive, and that really turns people off, including myself. Like, do I want to watch? Okay. There's like Arabian Nights, right? Like Arabian Nights is not Arabian. Let me give you a better example. There are certain genres that have certain typecasts that are in there, and then all of a sudden they just kind of want to throw DEI in there, and then they kind of destroy the story to kind of fit a narrative, and that doesn't work out well, And then people kind of get turned off by it, and people are just like, "Look, I just want to watch a show." Did you guys see something hilarious? This guy, the Plain Bagel or whatever, or somebody on Twitter who's a big creator said, it's like, I just don't want to watch movies on Netflix where the entire ending is just gay romance. And so then Couch Investor replied, maybe Netflix algorithms knows what you like. It's like the secret, you're just gay. Good times. But the point is, just try to find original content, build stories around that original content. Stop trying to make everything inclusive, exclusive, whatever you want to call it. I don't know.
Dude, this is why I'm against this deal. I mean, not necessarily like the DEI point specifically, although that does play a role, but more so competition is good for consumers. The more you bundle, the more you consolidate, the more you can increase your margins through increased prices, and consumers have no real choice because you paywall all the content. But you're now having a golden age, I think, of content creation, with Apple having gone into the space, Disney leveraging all their IP, Amazon. Like, Apple has some, like, I will stand by the fact that Apple has some of the best original content out there that consistently hits, and they're not even a top contender when you're talking about, streaming platforms. But there is a place, I think, from a consumer perspective, where I'm like, you know what? I hope that you have so much competition because I benefit at the end of the day.
Did you see that comment? Robin transitions to a woman. Batman marries Bruce. Catwoman has a baby with the Joker, who then dumps her for leaving her as a single mom.
So here's where I'm at with this. I actually don't think it's going to go through. And the reason is because right now, Netflix is already in a dominant position as number one. And I don't think they're going to allow Max Discovery to get in there and compound it and leapfrog everybody even more. And I think Larry Ellison's going to go directly to shareholders. I think he's going to up the bid. And I think he's going to say, wink, wink, nod, nod. This will get done with us. It's not going to get done with Netflix. And I just think selfishly, the administration is going to love nothing more than for CNN to be under Paramount Plus. And I think that that's going to be Conspiracy Alley, part of the bargaining chip that, don't worry, we'll get CNN under control. Don't you worry. And I think they're going to do that. I also think Paramount and Max combining is a lot more reasonable because they would only be the number 3. They wouldn't even go into the number 2 slot with millions of subscribers. Netflix plus Max opens up the door for a big regulatory hurdle. And the reason I think Ellison's going to pay up for the assets, these assets are never coming back up for grabs. And it is a tremendous amount of assets when you think about Warner Brothers Studio, all the Warner Brothers IP, the HBO Max studio, all the original content from HBO. So I'm going to be shocked if this gets through with Netflix. I'm going to be shocked.
It could. I mean, they could just spin out CNN and it could get through.
Well, that's what they're planning on doing through the Netflix deal, that all the legacy TV brands will be spun out into a spinco, into a separate company, and they'll unload some of the debt from the balance sheet into it.
To be honest, guys, I'm not particularly bullish on any of these names in like this, like one area, only because the trends that I'm seeing are that a lot more users on a per time basis spend more time on YouTube than they do on a lot of these things. Like I can't, like myself as well. And I'm sure I'd love to hear this from the chat as well. Which platform do you think among all the ones that you just showed that you use the most if you were to compare it to YouTube?
So
for
Chris,
me, I think
can only put 4 in a poll. Which 4 do you want in the poll? Netflix and what else?
Just put YouTube. Yeah, go ahead, Tevis.
Netflix, YouTube, one other main streaming service, or maybe just put like traditional TV, like whatever's on TV kind of thing, and then I don't know, other streaming service.
Amazon Prime?
No, just keep it a general bucket, like other streaming service.
Okay.
That's not Netflix.
I
also,
think
my camera died, so I'm probably gonna head out, guys, but I'll be watching.
I would say
see you.
User generated content absolutely destroys these guys' business in the future. I mean, I still think there's value that's going to be there, but dude, the cost of making content and then people watching that content, I know it's going to sound sad, but I think Amit probably has more reach than CNN does at times.
Oh, definitely.
You know? I know that sounds stupid, but you have certain YouTubers, they've got a really strong brand, strong following. There's more people that watch them. Same thing with like Twitch. A lot of people use that. So as much as I want to say like, oh yeah, you know what? I think all of these companies are great. I think the best business is freaking YouTube. What?
The votes are over. I can't show it until I end it, but the votes are overwhelmingly saying exactly what you just said. 105 votes, 93% YouTube.
Yeah.
93%.
I mean, it's like this around the world, dude. I ask people all the time, like, okay, which one do you watch? Which one do you do? And they're all say, I watch YouTube for like 2 to 3 hours a day. I'll use Netflix once like a new show comes out that they really like. Like for me, I love Game of Thrones. So anytime Game of Thrones comes on, watch it. But then most of the time that I'm spent on watching anything on anything, even on the TV, is typically YouTube. YouTube content that it's either educational or something that's informative, sometimes things that are funny. I watch some ASMR videos, it's funny. I told my wife, I was like, don't judge me, because like some ASMR content is a little bit strange, but I don't know why it like really helps me fall asleep. Like there's this guy, his name is Jason Rupp. All this guy does is go around the world and gets like haircuts. Okay. And I know that sounds weird, but I just watch his channel and like, bro, I fall asleep. It's like great. It's like this, the guy gets a haircut and it puts me to sleep. I don't know if anyone else here on the chat has an ASMR video that they watch, but if you go to his channel, right, just go to if you go to like Jason Rupp, and his entire channel is literally just him getting haircuts. Some of his videos have like 5.8 million views. It's pretty insane, So yeah, it's just YouTube. YouTube is content king.
Yeah, I mean, I use YouTube the most. There's just things on YouTube that you can't get anywhere else, and I don't need to sit there and just watch CNBC. I can just get the clips I want. I get the Compound and Friends. I got All In. Those are the two that I religiously watch. I mean, YouTube's just got great content. Period.
Yeah. I mean, and it has anything and everything that you want, right? And I think the people are looking for. I don't know. It's just I have a few channels. Like I love Warhammer. I love listening to Warhammer lore. YouTube has all these Warhammer lore channels. Yeah, I mean, I wake up in the morning and go to sleep, and I probably spend at least like 3 to 4 hours on YouTube. Of course, I'm here to support my friends, you guys, so I'll listen to your channels and stuff, And like the day after, if you guys have had some kind of thing, I'll listen to it. In the morning time, I usually wake up and I'll listen to like Amit's morning live stream. Yeah, I don't know. It's now that I think about it, I'm like
Amit's stream in the morning is my car ride. I mean,
yeah,
it's yeah.
It's interesting.
Yeah, YouTube's built a phenomenal product, and we'll see what happens.
I wonder if Google will ever IPO YouTube. Like
Funny. I wanted to talk about IPOs. I saw something about all these companies IPOing in 2026. I don't know if they're all going to, but now they're starting to say freaking OpenAI is going to IPO, Anthropic's going to IPO, Figure's going to IPO, Apptronic. Are you interested in any of these companies?
No, typically when a lot of these companies they first IPO, that typically means that there's a lot of froth in the market, and these guys know that they can get frothy valuations. And so unless it's some really unknown name that a lot of people don't know about that is IPOing, I think it's good to just give it like a nice 6 months to probably 12 months to just let companies even out, and then you'll probably get some really good deals. Like look at what happened to Palantir. Palantir IPO'd, went up and then went back down. Robinhood went up, went back down. Zoom and all of these guys, every one of these companies, like when they IPO, they're usually IPO with like the strongest metrics. And then over time, people wake up and they're like, oh my God, this business is not growing nearly as much as they were claiming during the IPO, and it's slowing down. And then you have all this irrational sell-off, and then you really get a lot of great deals. So I'd say probably just wait. I wouldn't necessarily buy into an IPO. I mean, think about it this way. If you're IPOing, you're not IPOing because you're undervalued. You're IPOing because the market is giving you a great value. Huh?
You need to raise capital.
Yeah, you need to raise capital. And what's the best time to raise capital? It's when the market is valuing your business as high. Yeah.
Yep. Yeah. So what are you looking forward to this week, Chris? We got Oracle, and we have what was the other big one that is reporting?
I'm trying to dissect.
Broadcom.
I'm trying to dissect Oracle's business model under the current RPO messaging that they have. Because remember, they showed off that they have a crap ton of RPO, and their entire ecosystem now is reliant on OpenAI, right? So if any weakness happens in OpenAI, then Oracle's getting slammed. So the question here is, what is the value of OpenAI? That's a huge counterparty risk that you have to deal with.
So, I have a hard time believing it's $500 billion.
Exactly. So then how are you going to be able to sell OpenAI all of those services? I don't know. It's such a weird conundrum to be in. Broadcom is going to do fine because Broadcom's going to basically show off just how powerful their platform is when it comes to the TPUs from Google and Trainium for AWS and Meta's MTIA thing that's supposed to come out. I think Microsoft has their own thing, and a lot of those ASICs are from Broadcom and Marvell and MediaTek and all these other things. I don't know. Like it'll be interesting to see. It'll be interesting.
Yeah, I mean, I'm worried about Oracle. I'm worried that the debt load is going to make the bears come out and say, we told you, blah, blah, blah. This is more of a bubble, but Oracle is the only one out of the big ones that are running at a negative liquidity position from cash on the balance sheet to actual debt. So I just think that if we don't get a rate cut and Oracle's debt is significantly higher than it is at 83 billion, we're really going to see the bears come out again, which would not be good for an end of year rally.
Yeah, I agree. Oracle's definitely got to deal with that debt issue. But the thing is, if there's one person that you don't want to count out, it's Larry Ellison. Larry Ellison, even though people may or may not know this, but Larry Ellison he's been in the Valley for like almost 4 decades now. The guy knows what he's talking about. He's one of the smartest guys on there. But then again, he's also made some boneheaded moves too, like losing what's his name, Thomas Kurian. Thomas Kurian used to be his right-hand guy over at Oracle, and then Google was able to poach him. And now, if you look at Google, GCP is one of their fastest growing segments. You know, yeah. And Snowflake, the founders of Snowflake used to work at Oracle as well. I don't know if you know that.
You know, that's something I need to look more into again. Snowflake, it dropped the other day, and I need to do an analysis on them.
They have tough time competing against Databricks. And the thing is, like when you're Databricks, you guys they're not public. So because they're not public, they're able to kind of undercut you because they don't necessarily have to worry about shareholder backlash that like you as a public company have to. Like imagine right now you're Snowflake, you're trying to compete, and you have a competitor who's not public who's like constantly cutting you off, cutting your margins, you know, and attracting businesses. People will get pissed off, and your shareholders will dump you while they're not doing the same thing to by the way, someone said OpenAI needs a browser. OpenAI does have a browser. It's just not good. I don't know if anyone just checked it out. Here, OpenAI browser. It's called Atlas. This thing right here.
Yeah, they're trying to make it more mainstream.
Right here. Atlas. Like I said, I tried it for like, I don't know, maybe like a day. I didn't really find it as useful. I just went back to using Chrome again. So that's what it looks like.
So what do you want to talk about for tomorrow night?
To be honest, I haven't done any research on anything, man.
You want to do Oracle heading into earnings, maybe? You want to wait till after earnings?
Yeah, I think we'll probably wait. This weekend I was at a cabin trip in North Carolina. Like me and wife and the friends, we all went to like Sapphire Valley, and we just stayed at a really nice cabin. So I didn't really get to research much. I mean, to be honest, even the company that I'm just heavily researching right now and just super bullish on is just Meta. Like
what are you researching? It's fucking undervalued. So undervalued.
It's not that. That's not what I'm researching. I'm trying to research the total impact of how AI is being integrated into Meta's platform and what the value is going to be not a year from now, not 2 years, but 5 years from now. Like everything that I'm looking at is up and up. So I'm trying to just like challenge my own thesis to say, like, okay, like could there be a challenger to them and what's going on here? And the part that gets me super excited, to be fair, is this whole thing with AI powered ads, but then also AI ad generation. I'm like, how much money is spent around the world trying to create an ad that attracts a person, right? Like what gets you through the door? With the knowledge graph that they have on a per person basis, I think is insane. Like they know everything about you. They know every conversation you've ever had. They know what you like, who you are. They have like pictures of you. You're a verified user. You're an authentic user. It's an insane moat to have. And I'm like, there's no one like.
How about
It's
this?
just yeah. Mhm.
Their main product, they just had to build the frame. We
Yeah.
create the content. We
Yeah.
create everything. It's the most amazing. It's just like YouTube. It's the most amazing business model.
Yeah. It's insane. Insane.
insane.
So, yeah. So I'm just like I said, I'm hyper focused on making sure I'm crossing my T's, dotting my I's when it comes to Meta, making sure that I understand what Zuck is trying to do. There is like a little bit of sleight of hand, in my opinion, happening where people are kind of focusing on reality labs, and to some degree, Meta is transitioning to combining kind of like their social media aspect with some of their AI stuff, like outside of just going on your phone, because I think that's one of the things that Zuck has always spoken about that he I don't say missed up on, but that they missed was that they have to pay the Apple tax and they have to pay the Google tax, right? And that's something that really pisses him off. Like your entire business is dependent on the good graces of these guys. Like when Apple turned off the whole like demographic sharing and all that stuff, it almost killed Meta, you know. But luckily AI came in and kind of like saved the day for them. But dude, that was brutal for Meta, where they couldn't track user data anymore, you know. That would have been really bad. But
Yeah, I mean,
whatever.
Very long Meta. I think it's going to do very well. I think it's very undervalued. And part of my long-term thesis is that Zuck, we transcend screens. I'm not in the camp that believes we're going to be on screens for the rest of our lives. And the company that wins that battle is going to be on the cutting edge of the next frontier of computing. And Zuckerberg wants nothing more than to be that company because he's had to pay up to 30% tax to Meta and Apple, just like you said. He's not going to do it again. He's incentivized to win. And that could be a huge tailwind for us. And also the fact that it's down off of bullshit this quarter is the other reason. You know, it's a non-cash impairment. This is something that Q4 numbers are going to look amazing, and the projections for 2026 are going to look really good. So I think that we're going to see pretty big turnaround in Q1. It's one of my names right now, and I'm very excited about them.
To be honest, my biggest win this year has been Google. Like I have a ton of spreads on Google and they've just been printing. Now I'm thinking of selling them and buying higher strikes on them. But I'm also like, do I want to convert possibly?
Did you see my article on them?
I know I did see it.
I think now is the time and I'm not saying I'm bearish because I'm not.
Yeah.
Alphabet, the easy money's been made.
Yeah.
I think it's going to consolidate. And I think it's just going to match the S&P now for a little bit.
Which is why I haven't sold it. Like my strikes are way lower than the current stock. So it's like, now the problem is most of the spreads that I have, they go out all the way into the end of 27. So it's like I gotta just like wait, you know, and I could theoretically sell them and take the gains that I have, but then it's like, do I really want to pay the freaking taxes on these things and then start all over again? Or do I just need to like let the winners do its thing and just, I don't know, I'll let the winner do its thing. So, but I do believe that Meta right now has a good chance in the next like 60 to 90 days of getting to that 750, especially if Q1, when I think they report the end of January or early February, if they show just how dominant they are when it comes to this AI ads platform, which I think is going to be amazing for them. So I don't know if you saw this like data that just came out with Black Friday about how AI search was one of the primary reasons why there was more spending for Black Friday, where
Oh, yeah.
the ads themselves, because of how like they were targeted to people. So there's a couple of things that are happening on the macro side that are very interesting to see. Like, number one, people are not buying as much, but they're buying a lot of things that are a lot more focused. So the total volume of things that people bought went down, but the total like dollar amount that people spent went up. And so everyone is being kind of like, they're just being a lot more discerning with how they spend their dollar for Christmas. And the thing that really helps Meta's case is that if you have a consumer who's geared towards trying to spend money in the most efficient way possible, when you're constantly bombarded with ads and everything else that are very tailored to you and actually show value towards your product, I think that gives you an edge versus someone who just has mass distribution without any sort of focus on the person themselves. So as an example, showing me 1,000 tampon ads is not going to do anything because I don't buy tampons. So if I watch linear TV and I'm seeing tampon commercials, it does nothing for me. But if you're talking to me about, like my father-in-law, he loves golf. He's a friend of mine on Facebook, right? And Instagram. If I saw like a driver that I thought would be something really good for him, and I saw a commercial on that, I'd probably buy a driver. It's the same thing for you. So I started looking at I get a lot of Harry Potter. My wife loves Harry Potter. So I get a lot of Harry Potter stuff on my Instagram feed now. Because my wife is always sending me reels too, and a lot of reels are Harry Potter reels, which is interesting. So
Yeah, I mean, I've always said that the two companies that will not see a decrease are Alphabet and Meta in where companies allocate their advertising dollars, because you get the most bang for the buck with those two platforms because of the amount of data they have on search history. So it's the best way to target your demographic.
Yeah. Another thing is localized, like one of the things about Meta is that they have a very keen focus on small businesses. And I asked someone who has a small business, and they kind of gave me a little bit of insight. And they said, look, our sales are up because we run targeted ads based on geolocation on Instagram. And one of the things that they have is like, there's like this symphony by me that has what is that thing called? That has like different genres that come out, right? And that orchestra, they were trying to reach out to like the local community to basically put their product out there. Now, here's the thing: how do you get distribution to people within a certain geography? Well, Meta knows where I live, or at least the locate, like around the area where I live. It knows my interests. So it's been serving me ads on that. And so the other day I was like, oh, me and my wife would love this. So, I just kind of asked her, I was like, hey, do you want to go see this orchestra and symphony? And the thing is, like, I never would have known that actually existed unless it was served up to me on an ad somewhere, like I don't have a lot of friends that go to these things, but I enjoy it. So I don't actively go out looking for symphonies, but because I saw it pop up on my screen, it was like, oh yeah, maybe I will go to this, So the total user engagement, I think it's pretty good. So
have you seen QXO lately?
Yeah, it's been rocketing up. That was crazy. What the hell is happening to it?
No news has come out about any acquisitions or anything, but it's over 20.
Why did that happen? It's just, you think it was some big fish buying things in?
I don't know. The Q2 earnings were pretty good, and I think that I think that 2026 is going to be a big year for them. I really do. Now, sure, it can come down, but it's up 15% since I wrote that article on it.
Yeah,
October 28th. So just over a month. I mean, this is one of the dark horses for 2026 for me.
Which one?
QXO and Salesforce, two dark horses.
Interesting. Yeah, I'm gonna have to pick some dark horses, but to be honest with you, man, Google, Meta, those are the only two names that like are, in my opinion, if this whole AI, quote unquote AI bubble pops and Google takes a dive, or Meta takes a dive even further, I'll buy more.
I'll argue that if the AI bubble pops, and I don't believe there is one, but let's just say that there is an AI bubble and it pops. I'll even go as far as saying it doesn't fucking matter for Alphabet or Google.
Yeah, not at all.
Because it's not going to stop their revenue from being generated. Like, what's the definition of it popping? Alphabet's generating 140 billion in cash from ops. You think people are not going to use Google Cloud? You think people are not going to pay for advertising for search? You think that YouTube ads people aren't paying for? And you think people aren't paying for services on Android? Like, it's one of the most perfect businesses there is.
Yeah. Can I address something? So there was this time where I said AMD would be bigger than NVIDIA. And I said this in 2022 before ChatGPT. Hey, you call shit wrong sometimes, guys. Relax. It's not that like GPU market was a lot smaller prior to ChatGPT coming out. At the time, you saw AMD taking a crap ton of market share from Intel, you know? So I think a lot of people, what they do is like, dude, don't using a tweet from 2022 prior to ChatGPT and everything else, it was probably accurate, but ChatGPT came out, threw that entire thesis out the door. So I think a lot of times people will go back into the Twitter history and say, oh, well, you said this and this, something else happened. I'm like, do you not see that the entire world kind of changed over the last 3 years?
I mean,
You know,
shit,
are people
it changes. And that's
yeah,
all there
are
is to
people
it.
are people not allowed to change their opinion? Are people not allowed to, like, the world changes every day, you know? Now, ChatGPT was the sea change in regards to NVIDIA. So, you know, that whole thesis went out the door. Not to say that AMD hasn't done well. And especially if you consider just how much AMD has grown their CPU business while Intel has retreated. Like I said, if it wasn't for the GPU markets, you know, AMD was going to do its thing. So
It's done very well. And Lena,
Yeah.
I saw your message. I am not buying Netflix. I think that this is not for me at these levels. And if this deal does not go through, I think the Netflix is going to sell off tremendously.
yeah. I think if Netflix sells off like to a degree that doesn't make sense, then I'll probably be a buyer. Only because they are generating a ton of cash flow. And so, you know, eventually those cash flows will be value accretive. I mean, did you see like their chart on fiscal, like their performance?
Yes.
Let's show you guys 1 second. So if you look here, this is their total revenue growth on a annualized on a LTM. So literally right now they generate 43 billion in revenue. If you look at their operating margins improved from 16% 2 years ago to almost 29%, right? And if you look at how much they're generating in cash flow, it's pretty insane. Because the thing is, like, the cost to serve every additional user becomes less and less over time. So they've got almost 29-30% operating margins. Which business do you know that has that kind of margins? You know, very little input, a lot of cash flows. So, by the way, they aren't taking on nearly as much debt as people think. Like, I know Warner Brothers has a lot of debt. I looked at the deal. It turns out that they're spinning off their Warner Brother TV and Discovery assets into a different holdco. And so a lot of the debt is going over there. So I think Netflix is only absorbing about 10 billion in debt from this whole deal. So it's not like you're going to wreck
38.
Yeah, you're not going to wreck Netflix's balance sheet to the degree that I think some people are thinking. So,
well, Netflix is doing the largest bridge loan from Wells that they've ever seen, and they're issuing, I think, 25 billion unsecured debt.
Yeah.
So,
I mean, they also have, how much do they have cash on hand right now? Let me see. Cash and short term. I wonder how much they need in working capital. Well, just take away this thing. Bam. They've got about 9.3 on hand. I mean, they need about 5 maybe for working capital. So yeah, they definitely need to raise money. Total. Let me see. Can they leverage anything? They've got 54 billion in assets, but I guess most of it would probably be intangibles. So, for people that don't know, intangible assets are things like Mickey Mouse. Like, what do you give value to Mickey Mouse at, right? What would you give a value to Stranger Things? Like, those are assets that you really. I know a lot of companies, they'll say, well, I have this blah, blah, blah in my assets, but you don't know what the asset is until you try to sell it. And so a lot of times when people look at like, and this is something that I've made mistakes in the past as an investor, I'll be like, oh, well, this company's trading at like a 1 book value. That's not bad, you know? And then it's like,
When the tangible
yeah,
book value is 50% less.
yeah, exactly.
Yeah, it's the reason they put both of them on the balance sheet. And if you're looking at banks, always look at the tangible book value.
Yeah, that's right. That's right. Yeah.
Yeah. Netflix just isn't for me. That's all there is for it. It's been a great company. It's generated a lot of profits for people. I missed it in the beginning. It's not something I'm going to chase. And there's too many unknowns with this deal that I don't think is going to pass. So we'll see.
I think if it goes low enough, then I'll probably jump on.
That's a different story. I'm talking about where it is now.
Yeah, I think if it, like I said, if it gets low enough, then and look, most companies are, if they fall low enough, they're good investments to make, especially if they're generating cash flow. You know, it's just a matter of finding that bottom in terms of like what the risks are. With Netflix, I don't see people going out there and being like, yeah, let me cancel my Netflix subscription. We haven't got to that point yet. But do I think that this deserves the crazy growth multiple that it retains? Probably not. I mean, let me look at the ratios on this thing 1 second. And then I'll probably head out.
Yeah, I'm gonna.
Let me see ratios. What's a good ratio for these guys? Forward PE or PE?
Do forward PA.
Okay. Forward PE. Forward PE. Okay, so forward PE, even though it historically has been super high, this is just how it is. When you go from like profitability, you know, to you're going to have a high PE because you're just generating a few dollars per share, and then because your growth is so high, it's over here. So its PE is 30 something.
Ooh, breaking news.
Yeah.
And Evan's stock market news just posted it 9 seconds ago. So
okay.
I'm going to say that this is probably legit.
Share your screen. Show your screen.
All right, hold on. So I don't know what the hell he was watching.
Mm-hmm.
President Trump just said the proposed Netflix Warner Brothers deal could be a problem.
Yeah, well, there you go.
I mean, I said that this could happen. I've been saying it since last night.
Yeah, I mean, look, this is going to sound messed up, but Trump has a very, very cozy relationship with Larry
Speed dial, President Trump speed dial. You need another $10 billion for your pledge whatever funds for American children. No problem. Here's the check.
So Larry Ellison and his son have a very, very special relationship with Trump. So just letting y'all know, sometimes this is the kind of stuff that yeah.
If you don't think that Trump wants CNN under the control of Larry Ellison, you're crazy.
Yeah, CNN.
Because
CNN
that Spinco is only the Netflix deal. Okay. That may not be the deal with the Ellisons. And trust me, they would love nothing more than for Fox News not to be the only mainstream news network on the right side.
There's a saying that we have in Gujarati where basically I'll paraphrase it. Basically, if you were on fire, I wouldn't even piss on you to save your life. That's how Trump feels about CNN. Okay, if
And
CNN
Netflix-
was on fire, Trump wouldn't piss on them to save them, bro.
And Netflix, like, listen, this is why I will not touch Netflix after this. And I really think this is going to become a political thing. I also think that, listen, Elizabeth Warren, like her or not, but she tweeted this 2 days ago that this should not be allowed.
Wait, Warren and Trump agree on something?
For different things, for different reasons. Elizabeth
Right.
Warren thinks it'll be bad for consumers because Netflix will have a huge monopoly.
Chris, that's literally an English quote. I didn't know that. My dad always tells me like in Gujarati. So maybe he's paraphrased it from English and I got it in Gujarati and now I'm paraphrasing in English again. You know. Yeah.
Let me see if I can find Warren's quote. Do I not follow her on Twitter? I thought I did.
I wonder what's going to happen to all of these companies when the Democrats get power again. I feel like there's like a lot of vendettas and scores that are going to be settled. What do you think? You think that's a possibility?
I don't like the political environment that we're in right now. So I think it's just going to be tit for tat going forward.
Yeah.
Oh, here we go. Netflix. Yeah, it's an anti-monopoly nightmare, Elizabeth Warren said. Here we go.
See, but that's the thing. Like if you think about it, Netflix and HBO, there's so many other like platforms out there. There's so much other content out there. I don't even know if this really holds.
I showed you the list with the subscribers. It would make the Netflix umbrella almost double Prime and quadruple Disney. So anti-monopoly nightmare would create one of the massive media giants would control the close of the half the streaming market. It could force you into higher prices, fewer choices over what and how you want to watch. So
look at what Scarelli said. Retard alert. You ever follow people just to see what the comment section is going to look like? I do that for YouTube videos. I'll watch a YouTube video for the comment section. Yeah. Anytime there's like any sort of like content around like a sexy female or whatever, everyone jumps in the comment section and is like, men of culture, we meet again.
We'll see what happens. I mean, look, this is far from over.
Yeah, it's definitely not. I think this is bad for Netflix because Netflix is now probably like regretting their decision.
5.8 billion breakup fee. Like, what are you doing, Netflix? What are you doing?
Yeah.
Horrible idea.
Yeah. Are you talking about Pizza Girl, Chris? I don't know who Pizza Girl is. Who is Pizza Girl? I gotta find that now. Pizza Girl.
I have no idea.
Let me see. Pizza Girl meme. No. I don't know. Put it in the chat. I'll check out Pizza Girl. I don't mind. I recreated. Yeah, I don't know. All right, whatever. I'm done for the night. I'm going to enjoy the rest of my night.
Can we figure out what we're talking about tomorrow before we go?
You know, Steve, this is the one thing I did want to talk to you about. You are doing way too many streams, man. Go out there, touch some grass, talk to the wife, spend some time, man.
I touch grass every day. It's called my carpet. I
know, but just
I'm good.
The thing is like you're gonna run out of things to talk about in the market, and then what happens is you keep talking about the same thing over and over, and it becomes repetitive. I caught myself doing that too, so it's not like it's unique to you, but just just ease up on the volume of content. I understand you're trying to like go hard with it, but just a little bit, Yeah.
Chevron.
I don't want to talk about oil, man. My bags on venture, my venture global bags are heavy. They're so heavy right now, but this is what I signed up for. I still remember the day that I spoke to Matt we spoke about Venture Global and Next Decade. I was like, just letting y'all know. Let me just start off by natural gas is known as the damn widowmaker for a reason. Okay. Aubrey McClendon killed himself. He was the CEO of
fucking Chesapeake. God damn it.
Of Chesapeake. Yeah. You know, Chesapeake, they're actually doing good now.
Yeah, no shit. Because they
Yeah.
fucked all the shareholders.
I'm sorry, but this is what happens. You dance with natural gas, you're gonna get your ass.
No, but do you know why we got screwed?
No, why?
Okay. And I lost a lot of money on Chesapeake. Okay.
Dude, if you've been in energy long enough, you've lost money on energy. That's just the name of the game. Man.
The fucking pandemic caused the country to shut down. Chesapeake was not in a great spot because they had just over 10,000 employees. They did not get any federal help, and they owed $290 million. And instead of freaking trying to sell an asset because they had so much land in 5 major basins, they decided to close down the company and reopen a new one. And they liquidated all the shares. The fucking courts allowed it, and every shareholder got screwed.
What happened to bondholders? They get screwed too? Or
I think the bondholders got screwed also. I think everybody got screwed.
That's the thing, man. Natural gas. Oh God, I don't even know why I look at natural gas sometimes. It's just, it's like a hot stove, you know. Like I've been touching it too many times, and yet I don't learn my lesson. I should just stick to like. But natural gas is also where you can make a lot of money if you get in at the right time. So
yeah, I mean, didn't Chesapeake and freaking Southwestern Energy merge?
Yeah, there's a lot of great deals in there. Like right now, all the LNG exporters are all sold off. So if you have a long enough time horizon, you could do really well. But you better be ready for some volatility. That's all I'll say about that. So yeah.
All right. Well, text me later. Let's figure out something for tomorrow night. Maybe we'll do Broadcom heading in earnings or something. I don't know.
Yeah, I'll let you know. I haven't really been paying attention to the markets outside of like the few names that I've been really researching, and so I'll see what I can conjure up. But
yeah, tell me what you want to research.
Yeah,
I'll research it.
Yeah, I'm trying to live my life too a little bit right now. I'm just trying to enjoy the wins, man. It's December, you know. I'm getting ready for the new year, but there's just we'll see.
All right.
All right,
everyone,
Steve.
Thank you for joining. Really appreciate it. It is 7:00 on a Sunday, and Mitch should be live in a little bit. So we will all be eagerly awaiting his stream to start. And
Yes,
I will see you guys tomorrow night with Chris. Either 8 or 9 o'clock. We'll let you know. And we'll go from there. Have a good night, everyone.
Peace.